Instant business funding, same day approval up to $10,000 without credit checks, and up to 2 million plus incredibly fast funding within 1 to 2 days, if not an additional couple of days. Fast application process without collateral, plus 0% interest for 6 to 18 months, and up to 250,000 plus in business credit cards. Hi, welcome in. My name is Michael, and I've been a business funding expert, a business loan broker expert, as well as a pre-underwriter slash underwriter for many years now. I know how to navigate the funding world, get you the right and best lender for you and your needs as a person and in business. There's a lot of over-promising and under-delivering out there, overwhelm, information overload, misleading information, going to the wrong source, people having your information, not knowing how. There's this thing called trigger leads where the credit bureaus have this information people can get access to. Then they contact you. They know you've been looking for funding, there's syndication. There's a whole lot of ways, and you just have to be careful and very mindful, protective of who you turn to for funding. And today I'm going to be going over different qualifications for faster funding. I'll cover also bank funding, SBA funding, personal term loans used for business, credit cards used for business with creative credit-based financing, and quite a bit. So there will be a lot to go through. Please stick with me until the very end so you get all of the details you need to know to make the most informed decision for yourself as a person, and then second in business. Before I go back into the share screen, I'd like to let you know that I do have your best interest at heart. I've been doing this for many years again. I know my ways in and out. I've been that person who's received funding, who's gone through the process multiple times. And I know what it is like when you're just getting started. You're unsure, not a lot of trust, loyalty, and then you jump from one place to the next. Another marketplace shows up. Is this a marketplace? Is it a direct lender? Is it direct, indirect? And then you question everything and go, what am I doing? I'm not really protecting my credit, even if it's just a soft pull initiated in the beginning. You have to be very careful and selective who you go to. You won't always get the best offer if you go to the wrong source. How will they use your information? Are they a third party sending this to a direct lender? They don't have something for you, so they just stored your information for a later time. They're sending you to the wrong place, location. You're not getting, again, the best offer, the best needs met in the process. The way the system is set up. And again, I completely get it because I've been through that. And now I run multiple businesses. Financing is my focus, but I have others that are on autopilot that I've set up for many, many years. And I also, educate people on how to get started with those. So I began way back in the digital marketing agency space, lead generation. I still have those businesses. And around the same time, I started building a health affiliate marketing business. And in case you wondered why that happened, I'm very introverted. So I'm not best with my words. I'm not a wordsmith. I'm very cerebral, analytical. And so for me to do this is already difficult as it is. I've learned the unlimited for life income skills, the high income skills, you can say. And I've applied these over multiple disciplines and businesses, day in and day out, the habits, the routines, showing up, being persistent, consistent. As an entrepreneur now, have created things, helped out a lot of people in their businesses get funding. Also a business growth strategist, startup, non-startup, credit, cash flow, collateral, liquidity, equity, and real estate in the mix with all of that included. So I've done quite a bit with many different businesses, manufacturing, restaurants, retail, Amazon, e-commerce, retail in that way set up. A lot of traditional brick and mortar, dentists, chiropractors, clinics of different sorts, healthcare, hospitality, construction, trucking. I can list many more, but I think you get the point. And I'm people over profits. Like I said, I truly and duly have your best interest at heart. And I look at character and characteristic traits. That's the very first thing I care for. A business is great. Like, you can tell me, you can share with me all the needs of your business and whatnot, and I can help you more than just get funding. Like I said, I'm a business growth strategist, so I look at customer acquisition cost, lifetime value, lifetime gross profit value, different marketing metrics, marketing and ad global sphere, profitability, cash flow. How can that be increased, decreased correctly? What do you need to do with your revenue model and models? New customer acquisition costs, current customer base. Do you have a residual customer base? Are you growing that? Are you not? Is it just reoccurring? How often do they buy? Customer acquisition cost to lifetime gross profit value. What numbers are you actually looking at to better your business? What's the base? What's the foundation? And then how do we grow from there? So I love math. That's one of my strongest subjects. And so I just wanted again to mention and let you know that I am somebody again who is here for you. And I'm very loyal, very honest, very trustworthy, very reliable, accountable, responsible. I've worked on personal growth and development, once an academic student studying, and worked out there in the field, construction, manufacturing, got my hands, not just cubicle, but got my hands, went to the job site production area, went into the blueprint room, did things even more data analytical. Warehousing, financial, courier role, and then financial logistics for a huge contracting company servicing HP and others. I was very underpaid, undervalued. I stayed there for post-academic reasons, for stability. Thought I'd go up a level, but the person in front of me did not end up retiring. And there's a downturn, 50 plus people relieved. I had to go back on unemployment benefits and food stamp cards. This was one of, if not the hardest times in my life. And just going to the grocery store to pay with my EBT, couldn't even look the person in their eyes, hoping nobody would be in front and behind me. I'd walk out of there with my grocery bag, so thankful and grateful as ever. My stress level low as I walked out the doors, getting into the car, but the thought just came back because I knew I had to prepare my mind. That's the tough part, is the preparation, and then the action of it, just difficult. Going out to have a family meal just to cover 25, 50, 75, 100% of the payment or whatever it is or was still very difficult. I wish I had more savings, more protection, more layering, more comfort, more emergency funds. And when I wouldn't pay, I felt even worse. And I'm the oldest of two brothers. I have a younger brother. We're usually 6 to 7 years apart. And I felt like a burden. And I didn't want my family to continue to feel that way about me, even though they wouldn't tell you that I was a burden or I am a burden. That's what it felt like to me. So I knew I needed to make a change. Long story short of it, in that financial logistics role, before it goes down under and before I'm relieved, I started researching, and from there on out, long story short, I started building a business. In time, if you want to learn more about my story, I'll try to leave more details down below. If that's not there, then it's okay. If you're watching it from somewhere else, that's okay. And I'll leave a button for you down below this video to get started. If there's a link, if there's additional resources and details, as I can update things from time to time as you see things get updated in the funding world. So let's get back into the share screen. I know quite a bit of an intro, but I hope that is helpful so you understand who is here that's helping you. Why are they helping you? Why is that the person that you should turn to? Have a lot of years of experience doing this, leading others, people who want to become brokers themselves, agents, referral partners at whatever level. And so here's this. Now let me switch over tabs to show you my documentation for the requirements for instant funding. And as we go through this, please keep an open mind. Please allow for feedback. Be as patient as you can. I know everybody has a different level of when it comes to character and characteristic traits, personality. And I know that kind of stuff, it's hard for certain people, or many people, I will say, to look at themselves in the mirror and say, I need to be the person that makes a change so I can gratefully and much more thankfully help others in my pursuit of what I'm trying to accomplish, is helping others believe that you know what you're doing too. And a lot of it has to do with your mindset, your own beliefs, your fear system, where that's coming from. And a lot of people don't have that properly developed. Is it actual facts? Is it just opinion? Is it a combination of the two? You don't have all the facts, so you need somebody else to help and guide you. And being, again, selective in who's helping you with funding is the best way to do this, and having a long-term strategic partnership and roadmap for longer term. That's what you want to have, not just giving anybody and everybody your information and having that level of standard. A lot of people have that standard where they're just going to send my application out there and they could care less about the person trying to help them. And that's the wrong way to look at this. Even if I haven't opened up as much, because it's hard for me to do that as an introvert, and I don't really trust people easily. If you've gained my trust, there's something you're doing that's impeccable. You just don't gain my trust easily. You might think it's the opposite. Usually you have to get it first. I have to give it to you. I get that. It goes both ways, but a lot of the times I'm very protective because people with funding, I have to be careful. Energy and time could be wasted in so many ways. People self-sabotage. It's very self-defeating. They slip up in part of the process. They don't get back to you. Again, that feedback, open-mindedness, and be patient as you can be, because I'm going to help you with this. So be mindful of the person, myself, and or who is helping you get funding. If they send you something, if I send you something, please get back to them respectfully. I don't pressure anybody. I'm not like that. So over here, for qualifications of the revenue-based funding without collateral, please read over this carefully and all else from this point forward. And the application link on page 4. If there's a link there to get started, you can get started right away. So it's in the back end for the review. Just so you know, there's other ways too that I can do this, where depending on the service and the level of service, is it direct? Is it also direct with a link? Is it indirect with a link, indirect without a link? It's a different service where I may ask for documentation up front before it's in the back end, or up front and then it gets submitted this way. But I know what's going on, and I'm that careful about the processes. I like having my hands, again, in that. I review financials quite a bit, bank statements, P&Ls, tax returns. That's my bread and my butter, is the analytical work. So the words is not my thing. The action is me burning my brain every day, reading through credit reports, transactions on bank statements, cash flow analysis, profitability analysis, global debt service coverage ratio, non-global debt service coverage ratio, SDE, seller's discretionary earnings, EBITDA. I look at everything. And I've looked at a lot of pitch decks. I'm doing huge equity stuff right now as we speak. And again, I only have your best interest at heart. So please scroll down to find the link to get started. If it's there, if it's been changed, it's been arranged differently, depending on the service too, you might see that, and you're going to get the best option. Sometimes it's better, depending on your file, to go indirect, where it's housed by a lot of funders or lenders, where we're protecting your credit, and at the back end, everything is happening. I know what's going on too, and you're going to get the best offer. Other times it's direct, and you'll know. And again, it depends on your industry, depends on your credit, depends on many factors. So just be careful and aware of what other people out there are trying to disguise, or they're not disguising, but do they have really all the information? I've corrected many people that come to me, go, hey, I try to get funding over here, but this and then this. Yeah, they probably are not up to date, or yeah, they just don't know what they're doing. They're trying to get you a line of credit. You won't qualify for it. And if they got you a line of credit, you're closely going to default, if not default, and be in collections. And so a lot of things happen where you have to be careful, and we're protecting your best interest as a person, and in business, you have to be realistic with the average daily balances and a lot of this. So you're operating for profit. Nonprofit, it just does not usually qualify. So let me bring up my red marker here so you guys can see it. So it does not qualify. Now, I've had certain situations where that can work, but we have to be realistic. Like, where are the deposits coming from? Like, what's that outside source that's generating you certain revenue in that business if you're operating for as a nonprofit? What are they? Charity, donations? What doesn't qualify for those? Is it an external source, like a pop-up shop and an event going on for this? And it's a shareholder, it's a different entity business that's flowing revenue through yours, or somehow, like, that has to make sense. A lot of this is checked up, just so you know the due diligence is done as much can be done. Do you have a business checking account? Must be in the name of your business, not a personal account you're using for business, and not transferring funds from personal to business. That does not count as stated true revenue. Now, what I'll say to that is there are exceptions. Sorry, I didn't have my little video down here, and that's okay that I didn't. I'm going to get to in a moment where you can have a personal account that you use for business, but you'll be limited on the amount of an approval, and you'll have a bottom minimum revenue, even a maximum revenue to have before you go into another tier of lender. So you have to understand, when you're getting fast funding, what is fast funding? Is it a bank loan? Is it a bank term loan, FDIC bank? Is it your Chase bank loan? Is it your Bank of America, Wells Fargo? I have other relationships where it isn't though. So stick around. I'll be getting into that. That doesn't mean you'll qualify for that, but keep in mind, you have to start somewhere. I've had many people where I've changed their mindset, and it's not just on the funding. And you can more or less see now that I'm not just a funding guy who knows funding, and anybody can tell you requirements. Hopefully, they tell it to you well. I know how to grow a business because I've grown mine and I've grown others. And as a person, I keep working on myself every day. Academics was the distance. Now we're personal growth, morning routine, transformation. And I was once that academic studying chemical engineering. Before that, sociology, playing Division I soccer for some time. Then I went into chemical engineering as that's how just my brain works. Math, systems, chemistry being my favorite class. And then I had to make a big decision and I got into business, got my degree through there. So, like I said, you just have to understand, and I'll try to answer any questions, guys, in the comments in time during this, after this. So please stick with me. I have quite a bit of material to go through. Again, this is going to be a video unlike anything else out there. And if you needed to replay, repeat, come back, watch it again. And I'll have information down for you in the description and or comments, and or there should be a button if it's on a different page. So let me get back into this. And we have, does not count as stated true revenue from personal to business. I'm not going to get into the logistics of setting up your personal and business checking account right now, okay? That is something that I also help you guys. So if I have additional resources or in time, you can check that out. And this is what I mean by having a long-term partnership and relationship with myself and those who know what they're doing. And there's a select group of people and limited amount of people who know how to actually ascend you and understand your financials, understand what service is best for you. Fast funding is not all entirely going to be, or at all, I'm going to say, a bank loan, and that's not what this is. Fast funding, unless it's an FDIC bank within 10 to 15 days, I'll get to that here soon. But rates, expect them to be higher. If you look for fast funding within a day, within an hour of an approval, or within an hour done, within the same day, business day, Monday through Friday, or an additional 2 to 3 days, I'll tell you this, when it's fast funding and it takes 2 to 3 days to fund, an additional 2 to 3 days after the initial day you got started, it's because it's not a good file. It's not a good file in order. It could be in good standing to move forward, but it's not a good file. If it's not a good file in order, it might just be declined right then and there. So there's a quick tip I'm giving you, that if ever you get funding and it takes you an additional couple of days and it's one of these types of funding services, many times it can mean that it's not a good file. It's a bad file. There's things maybe on credit, mortgage, missed payments. There's something else that has to be checked up on. How far ago was that? Credit is not the primary constraint. It could be the secondary. Primary is cash flow. It is revenue. The deposits, the transaction types, the amount of transactions, the average daily balances, average monthly, starting, ending. There's so much more that I have to look at too, just so you know. I'm just giving you a few things, but I spent quite a bit of time analyzing sections of bank statements to understand cash flow over a specific time in that month. The last 3 months, comparing increase, decrease revenue trends, the types of deposits. Were you low here? Why were you low here? I'm looking at everything. And so for those of you in here who get upset, well, I didn't get that was promised. You weren't promised anything. Who promised you were getting? Who's guaranteeing you were getting funding? Somebody who just tried to get you in. Guarantees don't work in this kind of world anymore. Economy, the level of trust that people have lost when people give you a guarantee, whether it's funding or anything else. I don't give you a guarantee. Are you guaranteed another millisecond in this world? Another second, another day? Think about it that way, in the gravity of it. So when you're moving from personal to business, keep that in mind. Fast revenue backed funding sources, rates are going to be higher, usually based on factor rates, not traditional amortized interest rates like bank loans. That's not what this is, but make sure that the benefit exceeds the repayment, and that's what this funding should be used for. If you need to use it for temporary relief or whatever that is, until you bounce back for seasonal changes, do it. Payroll, contracts need to be paid. You're going to lose out on one. You need a piece of equipment that needs to come back up, new piece of machinery that you're bringing in, but you're not doing it the equipment financing way. Doesn't make sense, or it's not what you want to do. You're limited. Okay, you got to think about that. So online banking is set up right here. So is your online banking set up? We're in a digital world now. So that's self-explanatory. I don't have to go into specific details and having your online banking set up. Check with your bank, credit union, your Chase of the world. That's my primary bank. I have others. but make sure you have all of that set up. 450 plus credit level, okay? Now, 450 plus, does that mean if I'm generating 30,000 per month, 20,000, 100,000? I deal with businesses who do 2 million, 5 million plus a month. That's not even a year. So 20 million, 30 million, 40 million a year, 12 million a year, 10 million a year, 5 million, 200,000 a year, 100,000 a year, 2,000 a year, 50,000 a year. I've dealt with it and I understand it. And so 450 credit, generally you want to be generating 15,000 plus in monthly revenue at a base of 15,000 plus in monthly revenue. I'm not going to repeat that again. Come back to this replay if you need to. Watch that. We have a lot of material to get through. Although 500 plus is best, if not 550 for lower revenue below 15K. So there's a type of revenue source and a lender out there where 500 minimum or 550 they'll ask for. A minimum of 5,000 to 15,000 is the range they want to work in, and you have to have 6+ months time in business. The rates are a little bit higher because you're not a client with better revenue, better credit, and so you won't get the favorable terms. You might get only 5 to 7 months, whereas opposed to another one gives you 3 to 6, 3 to 4 months. And then another lender will give you 4 to 24 months. Are you going to get those 24 months now? Probably not. Can you grow into? Can you get more over time? Yes, it's about taking what you can now and then coming back to get more in time. Please keep that in mind. Be strategic. You need strategy. I'm a business growth strategist. I've gone through things like this: credit-based funding, credit cards, personal term loans. Don't fail yourself because a lack of reaching out or thinking a lack of worth. I'm telling you guys this because I've done it over. I've seen the self-sabotage. I'm very energy and time efficient. I don't do the phone call thing every time. That's not what I do every day. I'm not cold calling. I've built a personal and business brand for myself online, and I have different digital and offline networks and connections. Very thankful and grateful for. And people will tell you it's because of who I am and why I am the way I am, what I stand for. It's not the tactics that I start with and the strategy that is just underneath that. It's the person. It's the why I do what I do, what I stand for, what's my vision. Well, what are my values that are driving that vision? And that vision, then therefore comes that mission. Am I properly going through my mission and what I'm trying to do? This has always been a passion project that I've just done well and giving back to the community and doing more. That's how I see it. And yourself, I can see the smile on your face, and I can only imagine that with your customer base, your suppliers, your vendors, keeping your business going. It's growing well. You've not been struggling as much as you were in the past. Things are going in the right direction, and you're the community support, the base, helping also the economy with small businesses and even larger businesses, medium size. If you're corporate level, there's a big play in that as well to factor in. And so the community development, the help that you bring, it could be a family that you're supporting because they came into your store. They're able to provide for their family and their needs. So I look way beyond this, and I'm not out here to get this. I'm caring for more of yourself and what you're trying to do in your business. It's less about this to me. If any I get from that, I give back to the business community and my other businesses and keep them going. So back here, so you have to see that. Although 500 plus is best, if not 550 for lower revenue. When you get into that 15K plus per month in revenue, 550 plus is generally what you want. If it's 450, yeah, okay, 500, yeah, but with what conditions and contingencies is the word I was trying to look for. But you can still get a look. If you have credit ineligibility reasons causing you to get declined or potential to get declined, but you have enough revenue of 3K plus, we'd have to look at another provider. And at that 3K plus revenue level right there, up to 10K potentially, that doesn't need an initial credit check. Once you do go through with that lender specifically, we'll do a hard pull when you have lower revenue at the point of you going through final underwriting. You sign the contracts. Yeah, I'm ready to go. Woo. Yeah, this has been linked or this has been added like this contract signed. Final underwriting, a periodic phone call. Don't always expect that. But okay, at that point of final underwriting, that needs to be checked. Why? Because your credit could be so poor and you can't even repay the amount that you received. You have other debt allocated. You have to keep in mind everything, your credit card debt, other types of debt that you have out there. Are you exceeding 16 to 18% of what you can afford in monthly revenue for getting an advance funding? It's beyond that. It's just above it. It can happen, or it's too far with the second position, third position. You're exceeding your cash flow for the day as well. And so all of this has to be kept in mind. And these are not typically called loans. In some states, you might hear that, but they're called advances because they're based upon your future revenue, your future sales. Think about like unpaid invoices if you do invoice factoring, or at least if you know that, or if you don't do it, it's okay too. Is okay, what are you getting from your customer base that hasn't been paid out to you? But this is also being looked at as what, based upon your current revenue now, your current revenue, what you have, what you've collected, will you be generating in the next upcoming months and even farther than that. So predictability with revenue is really the standard. Sorry for that little line right there. We'll just, here, let's backspace that. Okay. And so you see that right there, 4+ months time in business is generally what you're looking at, 15K plus in revenue. Sometimes you see 3+ months, but a lot of the times you'll want 4+ months. Another lender, if you're doing 5,000 plus minimum, 6+ months time in business. Another one would probably want 12+ months, 15+ months, 18+, 3+ years. When we start getting beyond 2+ years as the requirement, it's probably much more preferred in select funding, which we'll get into here soon. So it's an assortment of them. And it's always best to go through, again, a person who knows what they're doing, who has your best interest at heart. I know it's been iterated, but it has to be said a couple of times because funding is very dry. If you guys know this, it's hard to make it entertaining. And I'm not much of an entertaining, novelty-seeking person. I can be funny, dry comedy, dad comedy kind of thing. And so I'm very easy to get along with, very kind and very easy. So you guys should not have any problem with me. If you have a problem, it's usually the person you have to look at in the mirror. And I'm not saying somebody has to be next to you and that's the person. I'm saying like yourself. And I'm just trying to be nice and respectful. I'm not trying to be that person, guys. Just let's make it the most energy and time efficient experience we can as possible. 3 months of revenue of at least 15 plus per month, and on your lowest month, 15K plus or 5K plus if you're in California and in New York. So if another one you have 4+ months needed and you're generating 3+ months, 3+ in monthly revenue, that could be something to look at. Sometimes 3+ months is required, but that's what you see. 4+ months, a lot of the times, though, like I said before, is the standard. 3 months of revenue of at least 15,000 plus per month, and on your lowest month. So what happens here is people get put off by 15K plus, but I'm generating 15K in one of my or two of my last 3 months, and I just hit a bump. And this is what your reasoning is great. Like if I hear that, it helps make a case. However, when you're low, like 15K plus in monthly revenue to get a better lender, 25K, 50K plus, 100K plus in your industry, in your credit level, your time in business, deposits, the nature of your business operations, what you need the funds for, and plenty more. Only 2 things the lender wants to know is, can you pay us back? What happens if you don't pay us back? There's another one in there, but I'll just leave it at those 2. What happens when you don't pay him back? Can you pay us back with the money we're going to give you? What happens if you don't pay us back? There are repercussions to everything, so please be responsible and you know what you're getting yourself into. A lot of the times people don't know because they don't know business. Business is, I'm not going to say it's hard, and I won't say it's always the easiest, but yeah, it falls middle to if you just take the time to understand. And it can get harder as you grow and scale your business at times because now you have different metrics and different bases to build upon your past. But when you don't know business, that's the problem that most people go through, and that's why they need financial help. That's what you probably need to start off with. A lot of it is I also help you guys and refer and understand who the people are out there that can help you look at your financials in a different look and from an accounting perspective, bookkeeping. So if you guys ever need that too, business credit building, like I got you guys. Don't worry about that. I'm behind the scenes. I'm pulling the strings. I'm working. I'm making sure things are happening as much as I can, depending on that service and that level. But yeah, a lot of the times it comes down to simple, not understanding how to run a business. And so here we are. 15K plus and per month, and on your lowest month, 15K plus or 5K plus if you're in California or New York. Usually is it 3K plus is another thing to look at with another revenue-based lender. And a lot of the times 3K plus is it at a minimum. Oftentimes you'll see that. And one thing that I did want to mention, I won't talk about this too much, guys, and I want to keep going on this, is since I run other businesses, I just wanted to put this out there. And there have been many people who have joined with me. I've seen people in trucking, construction, manufacturing, Amazon. I wouldn't recommend Amazon FBM, Etsy, eBay stores, and all of this. If you can do it, and you do it at a high enough level and you know what you're doing, okay, keep doing that. And if you're tired of it, or if you don't want to start, it's not working for you, I don't recommend like inventory. Have to have your own inventory, warehousing space. You might have to drop in. You have these machines that are working for you though, that are giving you this output. You have all this, all these units and ASINs, SKUs, bundles. You're doing bundles. You're doing a whole different amount of ways of getting your product. Distributors, distributor changes, 3PL. I can go on. And there's different types of businesses with inventory, restaurants, manufacturing. I can go through plenty of them and tell you many instances. I've pretty much seen it all. And I know how to work around and fix the actual problem, diagnose the actual problem, listen, because I listen better than anything, and I ask the right questions. It's what I do as an entrepreneur, and I know how to run business. I can do it for people who have their own, and I can say I can go in there and see how I can improve that business. I've done it plenty of times. Done it for even in a 9 to 5 when they relied on me on do the marketing and their financing part. Did that. Their customer base, I helped them efficiently route their, go through the roads much easier and route their delivery services. That's just one part, data and other stuff. But what I recommend too is a digital business. So for those of you just getting started in yours, keep doing it if you want. If you're already in running a business and you've been doing it for some time, but you're looking for something out there that has more freedom, lifestyle freedom, time and energy freedom, financial freedom, honestly, there is a much better way. And this is one where you don't have to have any inventory. You don't have to have any customer support done. You don't have to have anybody on your payroll, no employees, no contractors, no subcontractors, unless you just wanted to subcontract your work. No purchasing a building, leasing, and then equipment, contracts. There's so much more. I've seen it all, and it goes crazy in businesses. And I look at the financials a lot. Some of them are clean. Right now, it's been up and down for many businesses. But if you don't want to deal with that and you just want to plug into proven products that already work, digital products with higher profit margins, better cash flow from that, less to fulfill on a customer, on the service, lesser cost of goods sold, cost of sales, keep more of your profits, keep more salary, then I'll try to leave more details in the description. If there's no description underneath this and just a button, you're watching it somewhere else and continuing with funding, please do that. And if you needed to get in contact with me about starting another business, please do so. I deal with digital stuff online. I've done the physical stuff, digital goods, software information. The information world is a great one to get involved with. And I have things created and stuff that I can give you and share with you with multiple products, building out multiple revenue streams. And that's the business that I recommend the most, is the digital affiliate business. And we can get into that a little bit later if you were interested. But now back to your regularly scheduled program. No, I'm kidding. So at least 3 to 4 months. So right here, before I go past this, California, New York, if your lower revenue is 3+ in monthly revenue, and the 15K plus, like I said, 3 months of 15K plus, not 115, 110, 18. No, 3 months of 15K plus, you're going to get a better lender. It's not just based on 1 month, the latest month. No, but 2 months ago, well, there's a pattern. Well, the latest month is less than 15K, but the ones before it were 10 or 15, and then now we're at 8. No, it has to be 15, 20, 25, better increase in revenue. Stability can help, but not 15, 10, 8. That's a cause for concern. And a lot of the times you're going to take the lowest number of 8K because it's so spread apart. The spread is a little bit farther than 15, 12, and 10. Then you have 15, 10, and then 8. So keep that in mind. Or I should say 15, 8, and then 6. Okay, from that 15 to 8, 8 to 6, a little bit lesser of a spread. So keep that in mind, that because you don't get the right lender, it's not over. Can you still use that? Do you have negotiation power? Can you start with less, take what you can, come back in about 30 to 45 days, or when you have 50% of that completed, or however much time you needed to complete that, come back, refinance, and I can help you do that. Or who's helping you? I can help you do that and get an additional one from the same lender, not have to get a second position, third position, fourth position. Now you're over leveraged. Now I have to help you with debt restructuring. I get a lot of debt restructuring clients, settlement clients too, and I do that a lot. So keep that in mind as well. If sometimes you need another position because you're growing that fast, or you really needed it because something happened, broke down, I get it. You have to, but Don't over leverage yourself with this. And so at least 3 to 4 deposits per month is best. The more, the better. So I'm also looking at the amount of deposits you put in your business checking account. If it's a personal checking account, there's another lender out there. You can use personal checking account for business, but low revenue, 3K plus, you're not getting into that 5K plus, 10K plus, 15K plus, usually amounts of an approval, or up to 10K with those. But if you're not running through a business checking account, you're just such a much more of a higher risk. It's not a good, you're commingling funds usually. And that's why from personal to business, it's just a transfer of funds. It's not actual deposits and stated revenue when you're doing that. It's not true revenue of the business. A lot of the times it's just you're moving from an installment loan one here, or it's an investment loan, or this is a specialty program. There's somebody sending you money this way. It's not part of the business. Like, you got to pay attention to all of that. You have maybe different entities running through one account. Like, you have one entity, but you have 3 bank accounts. We got to look at those 3 bank accounts. Like, now you're making it a little bit more excessive, which is fine, but I've seen that and I've helped with that a lot of the times. So at least 3 to 4 deposits. Other lenders, trucking. Guys, right now, trucking, you want a better lender, you better be generating more than 7 plus deposits. 7 plus deposits. The economy has shifted, 7 plus deposits. But that's to get a higher tier for your trucking business. If you have 3 plus, 5 plus, 10, 15 plus in revenue, 25K plus, like, yes, but you have 3 to 4 deposits. Okay, but now it might not be the best lender. Other times it's high quality revenue on those types of deposits, and it makes sense. Past conditions, this will happen, but keep that in mind. You're depositing your funds into one primary business checking account and not transferring with multiple accounts over and over again, which looks suspicious and is hard to track, especially if it's those online transfer from checking, like I've said before, and comes from like a vendor or similar, then it would not be counted as true deposits, as I've been saying, and be stated revenue. If you have multiple business checking account transfers, then we will have to look through them all, but also make sure you apply with your highest revenue one. A lot of the times people ask me, well, I have 3 accounts. Which one should I apply with? Oftentimes the answer is only with your highest revenue account. Other times I have to factor in what other accounts and what increase or decreases. I have to look at a few things. If you have bank statements with different banks, then we will likely need the last 3 months for each bank account, and you want to apply with your highest earning bank account. No more than 5 non-sufficient funds. Now I got to drag this down. So let me remove my red marker and move down here. Bring back the red marker. So we're right here now. No more than 5 non-sufficient funds, NSFs for shorts or negative days in any of the last 3 months. You don't want to have that. And again, NSFs or negative days. Other times, if it's like a higher tier funding, you're going to have a different standard at that point when you're generating a lot more revenue, and it needs to look a certain way. The market analysis, market conditions, I do a lot of that too, even more in equity. And I'm doing quite a bit of that right now too as we speak. And I've looked at a lot of pitch decks. I've done my own numbers and assessments, tried to gather people, presented things, and I go deep into those. I do my own Excel spreadsheet where I even calculate different numbers, but no more than 5 non-sufficient funds or negative days in any of the last 3 months. Other lenders, higher tier services, they might not even want to see 1 non-sufficient fund day or any negative days in the last 3 months. Okay, there's no exception to that, but you have a reason, but the exception and reason are 2 different things. Example, bounce checks. That's just one thing, okay? You guys can only imagine if you've been banking for a while, you run a business. It doesn't have to be banking on a business, personal side, or you have known people of, or this is what happened in the past. You should understand this and get understanding that with the bank you are with. If you don't understand your own banking, man, this is all going to be all over the place. If you're falling behind on any current MCAs, these are the merchant cash advances that I've been speaking of, the cash advances. There's hybrid cash advances. The MCAs generally off credit card statements, credit card receipts. When you're taking in credit card statements to your business, your processing system, I'm not going to start naming them all, but you guys can imagine which ones. And if you guys need a better payment processor, you need to change processors for whatever reason. You went through a settlement at the restructure, which happens when you have to restructure in that. You normally end up having to get a different processor so the MCA lender won't have to come after you, and that wasn't attached to their MCA and the lien on that payment processor, whether there was one or not placed on it. So if you do need a better payment processor, I do help with that as well. And I can cover that over time. Or similar, like a week or so. So with regular MCAs, you do see that credit card statements, a blend now. With hybrid cash advances, it's all revenue coming into the business. Credit card statements, receipts, how you're getting paid, getting paid on time. There's a change here. What are the revenues coming into the business? What are the sales? What's your revenue model? Other types of deposits that you collect revenue. That'll all be looked at and how those transactions look. Or similar for like a week or so. So if you're falling behind for like a week or so, you won't normally qualify. Now, if there's a reason why you've been falling behind, you're just got out of something, but it's hard to justify giving you money. You have another position. Well, yeah, we can give you, and usually when you have a position already, first position, second position, or whatever it is, I've seen so many, you have to be careful too. There are lenders out there, people out there who are not doing this right. They're going to give you sixth position, seventh position. They shouldn't be doing that. And there's a funder or a broker who sent you there and you didn't even know who that person was. And that's the kind of standard I'm asking for. And I don't just give my business to anybody. So if you're not there, that standard, it's just about working up to it. And that's what I'm here to help you with. I'm here to help you too as a person, not just what you can do in funding. This goes far beyond and transcends that. I even do lives from time to time, guys, on my Instagram account. So if you guys are not following me on Instagram, I do lives from time to time with my audience that I've built. People who keep coming back that know me, they know what I've done, family, like I know them. There are new people who come in, ladies and gentlemen. Now, will I say there's a specific time I always do that? No, spontaneously. Can I broadcast it? Yes. Will I always be doing this? Who knows with those lives? But I appear and I show you guys, I'm on screen. Sometimes I could put the screen, I could turn the camera over and show you guys where to look. There's a questionnaire form. And if I have a questionnaire form below, I might have that for you guys to check out to get started with so I can understand better. An additional describe your financial needs field so I can better understand. So if I have that in the description, look out for that. That's the best way to get started. Consultation call and all this, guys, energy and time again. And the vetting process, I have to understand what I'm getting involved with too, not only in business, but as a person. And there's a lot of volatility and different characters out there. And I just, again, want you, if you're not there yet, just overall as a person, the holidays, whatever time, it's not just for them and for gathering and having people see you in a different way, but like, what is Janet? What has John been doing? They don't even say it out loud. They just think of it in their head. And I've had people come to me in gatherings. Hey, Michael, so how's everything? What have you been up to? And I lean in because I've built my personal growth. And that's what you want to do. Oh, well, I'm working at this. No, it could be that answer, but lead in with yourself. Lead in with your story. People are affected because of your story and they can relate with you and they can build that know, like, and trust with you. So beyond what I was going to get into a little bit more of, so right here, so you won't qualify current loan consideration. If you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. More funds, second to fourth positions may be available. If you have an existing cash advance, it will cause a reduction in what you can get. Other positions, they might only do a second position if you have 5,000 plus minimum revenue. And if it's lower than that, it might not warrant you to get more. You might not get anything at all. So if you have more positions, you're over leveraged. And usually they reduce the amount you get by like 50%. It could be more or less based upon that other position you have. So don't expect that if you do get approved for 50,000 and it's only been paid off 25% of the way, how the heck are you going to get more than 50,000 to start with? Like, who's giving you that? If there's a case to make where, you got approved for more, wow, there's a reason you got approved for it, which you're going to get your return on. But you haven't even paid off 25 or you paid off minimum 25, 10%. And when you get one, you have to wait an additional 30 to 45 days or so, or 30 days for you to then get another position. You just recently applied here within the last 30 days. Oh, well, you got to wait. Stop reapplying every time. Stop bouncing everywhere. Have a higher standard for yourself as a person and in business. It's time to go. And if you need to lean on me, like I've leaned on others to help me grow as a person, lean on me. I got you. I know what it takes. I know what psychology takes of funding, building a business, and life psychology. I have a lot of wisdom, people would say, at my young age. And because I'm doing the things I need to do, I've gone through a lot of adversity. I've gone through a lot of self-discipline that I have, a lot of self-integrity, a lot of character building, builds adversity. And there's many different ways I can put that for you. but going through challenges, making your mistakes, going through your failures. I still go through my mistakes. I still go through failures at times. If it's not this or something else, a combination of this, it's not. But you have to think about, like, what are you going through to get to where you want to get to? And that's not just in business. If your compass in life isn't taking you where you want to go, your business likely won't. It could be your business is taking you, but your compass in your life is not. And so that's what needs to change, is your compass in your life. And what do we need to start with? The foundation. So the amount you still owe, go here. You might not get anything at all. This goes the same with all business loans, advances, etc. But if it's an idle that you have only, then it's okay. They are not correlated and shouldn't cause a reduction. So if you have an idle, one of these, or a bank term loan, yeah, that's helpful to get approved for. And we're not going to get into what's going on with idle and all, and it's been done and dusted here and there, and what you have on payments. I've done videos on that already, but I'm not going to get into that. Current loans consideration or loan or loans, excuse me. Part 2, the majority of lenders will not lend you another advance MCA, like I said, within 30 to 45 days. So make sure it's been past 45 days for the most part to then take another position. Consolidation, for example, we can either give you a second position if you don't already have one, or you don't have to pay off your first one, or you get a large loan or an advance and pay off your first and you net the difference. So if you want to pay off a position and you want to net the difference because you can't get approved just for one position just yet, you have to net the difference. Doesn't that make sense? Wouldn't that be most applicable? Isn't that most realistic? So not have a default with another advanced loan company, regardless of how long ago. This is the thing that I get it. I'm here to educate you guys. You don't have all this. That's fine. You don't expect you guys to have all this. When you come through with me, though, and you need to oftentimes you need to regularly see this kind of stuff, even after funding, that's fine. But that's what you're with me for. That's why you're in the best of hands. I've been a market disruptor in this industry. Go to many others. Like I said, the 3 things that I have that most people won't have, and I don't see this as, I'm not cocky. I've never been cocky. I'm very confident and certain. I'm a Libra, guys. If that says anything, I'm great in a team. Individually, watch me do. I'm best individually. I don't need to talk. I'm the guy who walks what I say I'm going to do. You don't have to tell me. You don't have to repeat to me once. I'm already doing it, or I've already done it. It's getting done. That's what you have to ask of yourself, is where am I on that spectrum? Where am I on my level of transverse, waves, frequency? What's my aptitude? Where am I hitting on my maximum, my minimum the most? And so the 3 things, again, is just wise, growing businesses, helping with numbers and much more, looking at things to fix. If it's not fixable, in the video. Okay, we're back. Sorry, there was a screen that went black there for a second. There was an interruption. And if not, you didn't see that. Okay, just streaming here. And then just, again, the person you're getting. And it's constantly stuff that I do every day that I work on: meditation, mindfulness, prayer. Go through my routine every day. I say thank you, even to people that were the closest to me, and they're no longer here. And like missing my dog brother. My dog brother is the reason I keep pushing every day. He's been my biggest motivation, and I miss him. Like, you guys I can't put it into words. I go silent many times too, and it's every day that I think of him and what he did to affect me, and the joy he brought in just the last days when we had to go put him down. It was the hardest thing. And so you see how life can be even worse. There's people out there who can't even eat, can't even talk, can't even walk, can't even listen, can't even hear, can't even see, man. And it's that thing right there that you got to work yourself for a higher cause and a higher meaning, because you get to wake up every day. You get to do the things that you want to do every day. And there's no greater feeling than you open your eyes, you get to breathe, you get to sense, you get to have that discipline, that level. And you have comfort, but you grow and you get out of that comfort zone. So consolidation, as I went into for netting the difference, and then not having a default, like I said, with another advanced loan company, doesn't really help. Doesn't demonstrate you can handle what you're trying to do, at least now. Regardless of how long ago, you don't usually get any more funding in this industry with the default. There's like 1 to 2 lenders who may help you, but you'll start with a lot less if you're getting any at all, and you have to prove to them, like, hey, we're going to give you 30 days, 30 to 45 days. You got to pay us back. They might they're going to have a higher rate, but like, hey, you got to prove to us that you can pay this money back. And then if we see best fit, we can help. Okay. Try to get you more and better terms, better rates. That's how you improve things. Better terms, better rates. Not the first time, second time, third time. Keep going. So with a judgment, so there can also be a default with judgment in place, which doesn't make it any better. And when you default on a lump sum, no lender will lend lines of credit, even vice versa. So keep that in mind. You're looking for a line of credit, you've defaulted. Have people always sending me messages like I've told them once, I don't have to tell you more than once. You have the message there that I gave you. You just look over the message, but this and that, but I have a different entity now and I moved my account. No, you understand that this stuff, data merchant, all this stuff that is looked at, that can be followed and tracked back to your last business and your last entity. I've seen it all, guys. Background checks. If your background report comes back with a criminal record or past financial issues and past filings too, then it can be an automatic decline. The UCC, depending on the UCC, what's restricted, what isn't, what's encumbered, what isn't. But we will be reasonable, and it's very reasonable if it was in the past and you've changed your ways. So I've had people who have records, incarcerated, abuse. There's quite a bit that I can give you guys as an example or examples. But pardon to make sure, yeah, you've learned your ways, you've grown. Here's who you are. Here's how you've grown in business. That's what I'm speaking to. Not used for real estate investments like fix and flips, rentals, etc., passive investments. Use the personal business startup funding for that and the credit line hybrid that you can see later below, and or traditional real estate financing, private lenders with my real estate specific form. So I have real estate forms that you can fill out, questionnaire form for business, like businesses like manufacturing, restaurants, things like that. And so I might leave that down below. And if you're watching this on another page and there's a place for you to get started with this fast advanced funding, look for the button. If there's additional resources or anything up to date, I'll try to leave you a link to a document or something if I can, so you can check that out. So soft pull credits, checks, and usually soft pull throughout the process. If needed to do a hard pull, you should be told ahead of time before. And the hard pull comes from that lower tier self-employed funding with lower minimum revenue, 3,000 plus when you're signing your contracts and going through final underwriting. Hard pull for that one. But once you start getting into higher tier revenue lenders, 5, 10, 15 and above or so in minimum monthly revenue for the last 3 months, 4 months still last for as well, perhaps depending on the state. 6 months might be tracked back to depending on your revenue and how it's been increasing and decreasing. Then just keep that in mind. So you'll see soft pull a lot of the times throughout the whole process. If you need to get a hard pull for whatever reason, a lot of the times you'll be known ahead of time, like anything usually is it. And that's why you have to be careful too when you're not going through the right source. Oh, they sent my credit here and there. Oh, the 3 lenders are calling me, they're emailing me. But it's so easy and comfortable to just say, I had to say yes to this email. I've had so many people come to me. Yeah, they didn't take the right decision. Yes, they didn't go through the right market or source or direct, indirect position, but they couldn't wait, or they weren't transparent. They weren't as loyal as I thought they were. They weren't as trustworthy. People change their trust like this, especially in the financing world. So I have to be very careful when it comes to funding. If you could be trusted, like you're that person who I've never had to lose trust with, and you never got irritated about something when I was doing what I had to do, but because of you, the way you acted, it was how you acted, not from me. Usually a lot of the times it's not me. I'm saying this honestly, I'm not perfect, but a lot of the times it's the person who's trying to get funding who slips up in something or more than one thing. Also, not have issues with financial fraud, past default and past default judgment in place, or judgments, you could say. Submitted altered bank statements to another lender. I've seen it all. I've seen this, and it still happens in this market a lot. Don't get past that. Will there be maybe a less than 1% who does? Maybe 1%. I don't want to even say yes to that. Has it happened? Sure. But will it continue? Likely not. Things have become much more restrictive. And the consequences of you doing that, even much more penalized. Court orders, legal issues. Could it be an SEC issue? Maybe something you had drafted that you messed up. My goodness. So you want to go through those tax codes, burdens, and everything? Stop doing that. Maybe it's time to start financially getting more financial literacy. That's probably something. Or maybe having a better cash flow management tracking tool. If you guys need all this stuff, let me know. I got you guys. CRMs, cash flow financial management tool, better than even QuickBooks, better than a lot of things. HoneyBooks, FreshBooks, Mint, Intuit, Xerox. Like I've got things that work even a lot better that you can track your cash flow, forecast your cash flow better, and have everything all in one place too. Set your goal setting, get your P&L, send this over to an accountant so they can look at everything with your tax returns. Like, that's the kind of stuff you guys need to have in your systems and running for you. Additional concerns for a denial. And right here is where we are. We look at this month's current revenue corresponding to the month you are applying to. Make sure you have enough revenue and deposits and that the month-to-date revenue is enough so you can support the loan payments, the advance payment or payments. It depends on the time of the month you apply. Best to apply early in the month if you know you'll be depositing less and having less revenue half the month or so in. Does that make sense? So what happens is people are applying at the wrong time of the month. They come into the 25th of, let's say it's December, final quarter. You need to get your budget in order for the next one. I know how it goes. I've seen it, guys. Help people with this stuff. I know why people are responsive when they're not. And so if you're coming in at the end of the month, middle of the month, okay, middle of the month, still, okay, that's the time of the month you start depositing better. But Mike, I'm going to have 2 to 3 more deposits with better. Okay, go. That's you. That's your business. So it's fine that you apply later on in the month. Your lower revenue was in the beginning with the first week or two. And now we're hitting that back end of the second week going into the third week. We're 50% plus of the way there. I'm going to have a good couple more deposits. I'm going to have more revenue than what's showing now. Okay, let's apply a little bit later. Or you don't even have to do that in your current month when they look at that and go, okay, but your past 3 months were good. Your past 4 months were good, depending on how much they need to look at. We need to look at your current revenue is a little bit lower in the beginning, but okay, your revenue is going to come up as it was the last month, and you have 2, 3 more deposits that haven't come in. Your invoices, you're front loading 20%, 50% of this. You're waiting to get paid back. You have a government funded project. You have an equipment that you need for this. This is your customer acquisition cost. This is your base. This is ROI you're getting out of this. Is how much you're netting out of this. True gross and true net, by the way, not what everybody is just amounting to and just basing everything off of their total revenue. So there's a lot of things we need to look at. So that's what I say to that. And it just depends per business on when you come in and why you would get declined because of the current month. So there's, with many lenders, what they're going to do is in a stage, they're going to look at the final underwriting. So depending on the lender you go into, you'll be, excuse me, I'm not much of a talker, so I get tired. And I know I'm going to have to rest after this. Stomach too. I'm going to go eat some oatmeal. I eat oatmeal. And guys, I got you. Don't worry. Like, I'm the cerebral. I really do pay attention to this stuff. Like, I overthink. It cannot always be a good thing. I can overanalyze at times. If anything, that's not my greatest weakness. It could sometimes, but my greatest weakness is that I care too much. But I know when that line is to be drawn. I'm very calculating. And again, I'm very considerate. And so you have to pay attention to these signals where you're not getting them anywhere else. Okay. And if it's not a call with me and we went through funding, that's fine. Just know it's behind the scenes. Everything's being worked out. If it's an email, I have things I have to do too. And we've connected maybe here, Instagram. You've seen my face 3 times. I've made that video. Like, I'm not doing anything wrong behind the scenes, guys. I'm working to do this. And if you come in and you waste my energy and my time, I'd never want to work with you. Stop saying something and you come back. Right now I have people who will call me, who will text. I don't want to work with them. I have people who don't get it, people who have done this to me, very inefficient. Like, I've shared this with them 2, 3 times, not even a document. Like, I even have maybe a call with them. Like, now I look back on that time and I go, please never again. If they really needed my help and they had no other means and I really felt for it, like not just, it's empathy, one thing, but do I have sympathy? It probably isn't for that person or that business. It maybe then is. It makes sense for that one person. So you have to understand, give empathy, but don't always give sympathy. So that's what you have to keep in mind. And there's a funding, like I said, there's a funding check. Oh, that's what I want to bring up. Sorry. So underwriting, there could be a funding underwriting call. If it's not an underwriting call, if somebody else has to call and check in about something and how you use your funds or just to make sure about this, something that you need to reach out for to collect additional information, if not myself and or someone else. And then you have the final decision logic. That's where there will be linking to see, well, the revenue, okay, is here, but the lender has to get paid. How is the lender going to get paid if they don't do a decision logic check to make sure what's in that actual account, to make sure they have that set up? And then also, they need a. Sorry, I'm getting a message. Okay. And what happens is they have to make sure there's enough revenue in that month. Like I said again, you applied late or something happens where there's not enough revenue. You didn't have a month in January or out of the last 3 months, there's no revenue, not enough deposits, or the current month right now is what they look at and they go, you've dropped over 50% of your revenue, even 30, 40% of your revenue is lost. But like 50% plus, like you're not making a good case for yourself to get it. But if I had the money and no, I heard it all, guys. Even if you could do something with that, that's not the point. So unfortunately, with the month to date revenue, half the month gone was too low to fund. This can happen. That can be a reason you get declined, like I just mentioned. Another thing is if you're applying in the current month and when we get to the bank verification, that's what I meant by like decision logic check. Other times, if you're an A-tier lender with an A-tier provider, they won't maybe even do all of that. They're just going to do a quick ACH or they're going to do something completely different. Wire connection. It's quick because they trust you that much. So they don't have to go through a funding call, decision logic check. But most of the time you do see a decision logic check. That's normally what you're going to see those. So just expect that. And then when the funds get into the account, how is it funded into that account that you applied with? Can I get it deposited into another account? Because no. You applied with that account. That's what you need to do. Get your funds applied into. And so what happens is after 30 or 45 days or whatever, there's more time in other circumstances, and different lenders won't always approve of that. If you have time elapsed, perhaps then you can then move that into another account and use that as the way to move forward, and you're depositing in that account. That'll be your best account moving forward to get even more funding with. So keep that in mind. That's another quick tip right there. And so current month, and when you get to bank verification, decision logic, like I said here, and to issue your funds, ACH usually to deposit and withdraw to pay the lender back, for final underwriting, and C, too many negative days, and your minus in your account and badly, like balances has gone low and average balances. And it's not just based upon when you get approved for 3 months, 4 months, the highest month. No, it's averages, lowest month. Looking at those two numbers, is the average too far apart from the lowest month? A lot of the times you see the lowest month taken because, especially in this economy, you have to be much more careful. So when people come to me, they go, I thought it was the average, thought it was the highest month, not just the average. No, we got to look at the two numbers. If the average is too far away from this, or okay, lowest from here, okay, we're going to get you up to the amount of the average, which is still further apart. So we'll see if we can do that and not just base that number off 50 to 100%, 50 to 200% off the average number of an approval. So this can cause us to decline a file and or lower the amount, but a lot of the times it results in a decline. So if you have these things going on, it can result in a decline. And that is said right here. I know we split things up here as I was going on. Now, let me scroll down. Let me remove the page marker and go back down. And we're going to get into here. We're going to get to some of the other options and we're going to close up. I know this isn't a short video. I could have changed this and give you different parts of the video for different means, but this is how I want to keep it. So another thing is, for trucking transportation clients, approvals are typically 50 to 75% of your monthly revenue, usually the lowest month. And we can consider averages, but lowest monthly, especially when the revenue is lower there. If it's your first funding ever and getting an advance, right here in advance, if not, and the account looks good and strong enough, and usually the second time around and more, it's higher, potentially like 75% to 120% of an approval. Just again, it depends on a case-by-case basis or so, but not set in stone, okay? So don't take this out of context. I'm saying, but not set in stone. I have people who come to me, but you said no. And I didn't even promise you that that would happen. Now, I'm on the ballpark around because I've been doing this for a while. I know enough, yes, how it'll work. Now, until the documents are in and everything's been reviewed, now it could be somewhat similar or it could be adjusted to that because now you're looking at it and you're basing it off those financials and more details of the business, credit especially. Many approvals in general for other industries are like 75 to 200% of your monthly revenue. And usually we look at the lowest month. Often other times approvals are lesser. So lowest month, 3 months, 4 months, depending on the state, depending on the state of the business too, and more. Declining revenue trends are not good. Low average daily balances don't help. Types of transactions matter a lot. Revenue strength, uses of funds, over leverage, missing payments, and so forth contribute to what? Lower approvals. And again, guys, this is stuff that you guys probably are like, yeah, I had that in mind, or yep, I knew that. And so there might be a link here where you can click the button or the link to get started, and everything will be in the back end for review. And again, if there's a button underneath this, you can check that out. So the amounts here that you are capable of getting are up to 2 million. If it's a different service, and if it's up to 5 million, 10 million, if it's a different service we're doing or a different tier of lending, okay. It doesn't mean you'll get the 2 million again. Just means that's how much you can get in funding if you qualify for it. More on that below. How it works. You potentially here can, okay. I know I have the U here, so let's put that back as it is and unbold that. Can get 100 to 200%, and that's if you're doing 15,000 plus, like minimum 15,000 plus a monthly revenue. But yes, there's approvals lesser than that, like 50 to 75%, especially if something's going on in the business and more economic factors to consider. So you can see 100 to 150%, or sometimes 50 to 200%, 75 to 100% if 5K plus in sales. So 75 to 100% if 5K plus in sales, sometimes lesser than that, like 50 to 75% or so. But less than 15K or so, it can be 50 to 75% for trucking. So first time trucking, 50 to 75% is usually allotted, but depending on your revenue, if you're doing less than 3,000 or doing 1,000, you might see 25 to 30%, 5 to 40% of an approval for trucking. And that 40% is putting it quite generous when you're generating that kind of revenue. If it's in your first advance funding, then after like that, it's like 75% plus. If revenue on your lowest month in the last 90 days or 120 days, depending on the state, and also looking at an average sit at like 10K or so, which is low revenue, you can expect approvals to be high and usually are on the lower end. So that's what happens when you have lower revenue of your lowest monthly revenue in the last 3 months or 4 months. And we also will take your average into consideration, trying to get you more. For example, if your lowest month is 25,000, so let's scroll down a little bit. Red marker. And we're right here. If your lowest month is 25,000 and you're averaging 25,000 with 350,000 in annual gross revenue at an average daily bank balance of 10K, which is good, or it could be like 5K here, 2K, and that's quite low when you consider how much revenue you're generating. It depends on the transactions, depends on cash flow, depending on other obligations, free financial investment, operational cash flow. Best to have above 2K is generally it. Anything lower than 2K could stand for an approval, especially with lower revenue. But when you start generating more revenue and you have lower balances, that's not a good sign. And 1,000 plus a lot of the times is usually it. Anything less than 1,000 can decline, but with lower revenue, that's understandable. 2K plus, good. Now you're getting into that 2K plus, all right? We're seeing something benefiting better, but we can still have a good look if not, but it can be harder. Then you expect to see between 15,000 and 50,000 less, likely less. If you already have a position, then it'll likely be half, if not less than that. More or less, and if first funding potentially times up to like 110% or 150% or so, can be higher depending on your business situation. If you have another position, past borrowing, etc., to start, come back at more right away if need be. You pay it off fast with your early payment discount and discounts more below, or you can use the funding for the duration of your term. Now, let me go ahead and remove this page marker here and keep scrolling down here. It can be higher or lower depending on your business situation, as well as depending on deposits, types of deposits, industry balances. I'm not going to cover all of this, guys. I might leave a document if you're viewing this from a different page. Maybe if it's not on the YouTube, I can try to share. If you fill out a questionnaire form, I can share with you some of these things or so in time. And that's what I do when you fill out a PDF, you get a questionnaire form submitted, is I usually put a PDF that's very comprehensive showing your best funding option and options broken down. So if I have that, you have that. But if you can go through a faster funding service and that's what you want, that's what you only need, and that's what you can only get, then again, that might be the best thing to get started with until you grow and expand and get into other services. So average daily balances. So there's quite a bit here. I'm not going to cover it all. Average daily balances as an example I put right here. Also approvals, 10 to 15% of your annual gross sales. You can see a lot of the times getting approved for up to 20%, but more on the 10 to 15%, 10 to 12%. A lot of the times right now in this market. And then low right now. Payment history earns you more. Add-on funds available. Receive funds time and time again. You get early payoff discounts and a personalized account manager to help you a step of the way. No, if you do not get the funding you want, then in about 45 to 65 days, or when you've paid at least 50% of it, then we can look at refinancing or getting you approved for more funds. Then the second time around, we can approve you for better terms, rates, and give you a higher amount. This is what a lot of business owners do, myself included. Also try to get you a line of credit, but if you don't qualify for that, I'll try to go over the qualification details for that. This asset-based funding option too is available, but that can be hard for some of them. If you really needed everything at most, sometimes people just need everything at one time. They can't wait. there's that as well. 4 to 24 months give you more than enough time. Sometimes people think they need more, but on a lot of the time, it's perfectly what they need. Sometimes all you need is 3 months. You pay this back. You got a 6-month term. All I need is 3 months. So just think of that. Then there's the online bank term loan option, but won't work. This is kind of just an example. Just leave it like it is right now. But you could have the credit that could work for it and more, or something else, revenue, cash flow, profitability. Some personal term loan, line of credit, service, or on your own, or somebody that can help you raising your credit up to a 680 level a lot of the times with bank term loans, and on all three with a FICO 2 check or just Experian, but you're going to be asked for business liquid credit of 145, 155, if not more or less, and better cash flow needs. So just keep that in mind. If you don't have business credit you're building, and that can go against you. And equipment financing, especially, or you go through an SBA, which may or may not work. Other SBA loans or faster funding up to 150,000, where net income, or you don't have to have a positive net, but less than 15%. It's not going to help you, or more than like a negative 15% won't help you. And there's quite a bit. So if you're looking for a longer term, better credit, better revenue, and more is needed. So your payback amount, 1.18 to 1.55 year advance amount. So for example, only for example purposes, not based on your file, if you get 30,000 to start, but could be less because of credit and all owners, deposits, balances, etc. Experience in getting this funding also matters. If low revenue, if low fluctuations, there's quite a bit. Your payback is 35,400 to 46,500. So you have to account for your approval, how much you're paying back. Your cost of funds is between that. Can you pay that off? Obviously, you can't walk away with all total of the cost funds and all of this stuff. And so does it make sense for you to pay it off early? Yeah, there's payment discounts, but you have to keep that in mind on how much you are saving and how much of a payment do you have. Can you continue to pay that? You don't have to pay it off early because there's no worry. You don't need that discount. There's quite a few stuff. So you can't always walk away with everything. Keep in mind on what you have, your principal and interest. So your payback is between that amount. Use this money to grow and increase your business, your revenue, and it benefits and exceeds your repayment. Giving the funding details, you might fall within a C2D paper, which gets you 4 to 6 month term. Sometimes they may be able to get pushed to 7 to 11 month term range because of the use of funds, revenue trends, projections, credit, but because of your revenue and credit, potentially more. But to get 7 to 11 month terms, you need to be doing 25,000 plus. Generally, is what you see. You might see that go up, and depending on the business, your nature of business too, and economic conditions. So rates can fall between 1.31 to a 1.55. With a 600 plus credit score to get 12 to 24 months, you want to be doing 50K plus per month. And for rates between 1.18 to 1.30, you want to have like 700 plus credit. Sometimes 7 to 11 months can drop to like 6.5 months or so, depending on the depositing and so much more. So you guys kind of see now some of the underwriting that takes place with this. So you'll know the exact terms and everything, soft pull to initiate the process, and soft pull throughout, depending on that lender. If it's lower revenue, it could be a hard pull based on the contract sign and final underwriting. So here we go. And so increase your terms, decrease your rates over time as you build that connection, have a relationship with the lender, myself, and more. But for example, not set in stone, you say you get 30,000 at a payback of 1.45 based upon different conditions, 4 to 6 month term, daily 310, weekly 1,550, biweekly 3,110, 100, excuse me, monthly 6,200. So can you afford that? Would it be less than this? Yes, depending on the revenue, depending on the credit, depending on what bucket you fall into. You might be paying 200, 220 a day, and it's probably a weekly payment instead of daily. Or if it's only daily because that's what you can afford because of your underwriting, that's what it is. Overall total cost of financing, 43,400, paid off earlier. You can, no prepayment penalties usually, and usually have the best payment discounts. So use this funding correctly, and it gives you more details here on how you should be using it. Over time, improve. If you take less, that's another way you can do this and offset things. So if you don't feel like starting with 310 of a daily payment or weekly, however much you want to drop that, if you have negotiation power to start with less, then okay, that might be an addition. Let's say you wanted to start with less. So if 25K this time, you get 8 months with a 1.47 rate, that's a daily 229 payment, weekly 145. So biweekly, monthly. Most of these are all daily and weekly. There's their monthly, but specialty programs, it's harder to get those, and it's not really just a given. Biweekly may, but it's still hard to do that. Usually it's daily or weekly depending on your underwriting. If 35K at 8 months, here, stronger balances and stuff, you have that there. Pay off discounts. So it's not set in stone again, like I said, and there's just more details here and just a little bit more. Payoff discounts, You get a discount of 12% on your unpaid balance usually. Includes principal and the cost of funds. Paid off month 2, discount of 10% and of the unpaid balance includes the principal and cost of funds. Paid off month 3, discount of 8% off of the unpaid balance includes principal and cost of funds. Payment discounts on A-paper clients. As an A-paper client, better tier lender that you're going to get will almost always provide prepayment discounts ranging between 20 to 25% the total cost of funds. Have I seen it go up? Yeah, be the case. Unlike for the B and C paper lenders having an 8 to 12% prepayment discount of the total amount due. So this is off the total amount due, including your principal and the cost of funds. The A paper lender will take the 20 to 25% off the cost of funds only and not the principal borrowed. Again, you can't expect to walk away with everything. Example on a 100K prepayment example, let's say you're getting 100,000 in business funding and you're given a factor rate of 1.38. That's 138,000 that you're paying back. The industry standard is half of these numbers. However, most of the lenders partners provide the rates I'll show you below. Using the 8 to 12% discount scenario right here, B and C paper lenders, that is, your prepayment discount will end up being 11,040 to 16,500. And let me erase this number so you can see this. 16,560 minus your amount that's already paid in. So take that number minus the amount that's already paid in. Using the 20 to 25% discount scenario, your prepayment discount would either be 20 to 25% off the 38K cost of funds or 7,600 to 9,500. So there's an example of that, and I can kind of go back and over in this, but I'm not going to do that right now because of time too. And does that make sense? It's a very unique way to get accommodated for paying your advance back sooner rather than later. There's even a different lender who might be doing it 1.19 to 1.29 if you pay back in the full 30 days. You get something better with a better discount. And if you pay within 31 to 90 days, there might be a lowered amount. So you might be seeing 20 to 30, if not 10 to 20. If you take more time, 31 to 90 days. If it's within 30 days, you pay it off, you'll get a better amount. It just depends. 1.49 to 1.69 if you pay it over the full 6 months or 4 to 6 months. Depends. Things change from time to time. So there's just some examples here on those paybacks amount. And I'm not going to go through all of this in detail. You guys can see this. You guys can pause it. But this is if it's a different scenario. And you don't always this might not be associated to you, but just gave you some more examples. And again, this is not set in stone. So just more examples. People getting 600,000 approved for. Here's an example of that. They're taking 150,000 to start with instead of the full amount. Why? Because they don't want to have to supply additional documents. When you get something over 100, if over 150,000, you'll be asked for like an additional 2 years of tax returns or 1 year, year-to-date profit and loss balance sheets, and maybe a little bit more to reason with. But if you start off with less than having to add additional documents beyond 3 or 4 months of bank statements, a copy of your driver's license, and a voided check, then you can start with less and come back for more over time. So here's an example there at 150K at 18 months with 1.23 rate. So very favorable. You're like 10,000, but that's different for each business. They can afford to, and they're going to grow their business. They're going to make even more. They're going to multiply their revenue because they were able to take this money. Or you can add the line of credit option. Here's more of the underwriting, 1.18 to a 1.29. A paper lending clients, FICO 720 score usually needed. Clients with greater revenue, 50, excellent FICO, 700 plus, but really 720 plus is it, and been in business 24 plus months. 2+ years is what you can expect as a payback rate. 1.30 to 1.39 equals B paper lending clients, 620 FICO to 719 FICO score is needed. 1.4 to 1.5 C paper lending client, 551 FICO to 619 score is usually needed. There might be fluctuations depending on the economy, but you see a lot with these kinds of things. 1.49 to 1.69 is the rate you're going to get for D paper lending. 500 to 550 FICO needed usually is it, depending on the service. When it gets past that, and there's a little bit more here, B to C to D, and we will close up here soon. I have to cover a few more things, guys, and then we will go. And so D paper, you see this right here and what falls underneath that. The rates you get vary depending on your FICO, your time in business, your other credit issues such as past bankruptcies, if any other, or number of current delinquencies. Lender partners take into consideration the time in business and monthly revenue dips when determining your rate. Other issues that may impact the rate you get are the number of current funding positions you may have, number of NSFs, number of negative bank days, number of inquiries on your credit from other lenders, if that's reported, or if it's not this funding, it's a different one, daily balances, along with a few other factors. So advances don't normally show up on your credit unless, like anything else, you're falling behind in the default, it's in collections and the delinquency. Like a lot of the things you see out there, Well, yeah, oftentimes you'll see that. So also most recently, the state of the economy and the market, like you may get less funding with lesser terms. And that's what we're seeing a lot across a lot of industries. Terms are usually dependent on business type, revenue credit, A and B paper, weekly, daily repayment. You might just see daily things shift, but A paper, B paper, weekly, daily repayments. So people who look like A paper might fall into C paper, or they might be a B paper instead of an A paper client in this economy and things that happen. That's 12 to 24 month terms though. You must have 50 plus in monthly revenue. It depends differently on each business. 675 plus FICO credit score, 1+ year time in business. C paper, that's weekly, daily repayment, 7 to 11 month terms. You must have 25,000 plus in monthly revenue, 600 plus FICO credit score, 6 months time in business. D paper, daily payments, 4 to 6 months. You must have 15K plus in monthly revenue, 500 plus FICO credit score, 4+ months time in business. So that's generally what you're going to see across the board a lot of the times. So when you're out there looking for something, you're not doing it correctly. And if things change, I can be the one here to help you and see how everything looks. So you can see what you would be getting, right? Again, these numbers for an example, I showed you no prepayment penalties. So just a little bit more details here, what you wouldn't qualify for. And these are the best, so you don't have to go into default. That's what you're being taken care of for. So you don't have to go into a default and you think monthly payments are best when honestly, I've had people come to me and go, Michael, I have weekly options. No, I want to do daily. I better contract my daily deposit, my daily inflow, outflow goes every week, or I can't do that. But you can only afford a daily repayment. You have to understand your industry. It's not just because you can afford a weekly payment, you can't afford daily. What's the cost? What's the opportunity cost of you not having these funds? You having to shut down your business, you having to go backwards, you having to lose a contract, a relationship with somebody that somebody came in a niche market, and the distributor you're going to lose, so you won't be able to track and be able to load the trucks with your equipment. You got to keep that in mind a lot. What's the cost? Is the cost of losing out much greater than the cost of taking that funding momentarily? You have to pay attention and don't do something you shouldn't do. Honestly, analyze budget wisely. So I just don't want you paying more on added interest. Also, when you see like monthly and you see other options that are longer term, you might have something where it's better cash flow dependent. Was it the most funding? Can you get it as fast? That's another thing. And did you really need that additional interest and amortize that way? You have to be careful. A lot of the times people need funding right now to bridge cash flow. They need working capital because they need emergency funds for a longer time than it was before. They need to have better longer term project needs with cash flow. So it's harder to say that they always need money for growth and expansion. So some of the great benefits here, and an all-in-one house too, you can get the best look of what you're going to get and get the best choice for you with the best lender as well. Documents needed. If in California or another state, more documents. Avoid a check, copy of your driver's license, 3 months of bank statements, and it just depends on the state as well. And it could be a fully easy, automated, well gone through answer a few questions, application process, submission, ready to go, and getting something coming back. And if not, there's a disapproval. Could be for credit factors or other ineligibility, revenue, some other things. Sometimes I can't give you all the details because it is sensitive and I can't be doing that. Other times, depending on the file, because of who I know, what I know, that's also a big advantage when you come to somebody who's been doing it for a while, who will be able to give you as much information as they can. So second option, you can always email things up front, but it depends on the state. With these kinds of services, a lot of the times it's better to submit it without me collecting things up front for you to submit it, and everything then is there in the back end for a review. So application, you might see that right there. And the easiest way to get started, new select funding. This is with the partnership above. You can go through the similar process, see if this qualifies for you. 100,000 plus in monthly revenue and $1 million plus per year, 3 years time in business, no non-sufficient funds, negative days in the last 90 days equals 3 months, looking at no more than 5 NSFs or negative days in the last 3 months. So that may be shifted where 5 is okay, no more than 5 NSFs in the or negative days in any of the last 3 months. Other lenders might say, no, nothing of this. 700 plus FICO, 4 to 18 month term, automatic weekly repayment. So that's automatic weekly repayment. Like another one of those options, which is 3+, is automatically going to be a weekly repayment. 1.18 to 1.29 repayment rates, as opposed to the usual standard of 1.3 to 1.55 repayment terms. 100% to 200% of monthly revenue approval. That's the rule of thumb. Canada funding. So it's been a little bit harder, but there's that as well. There's funding available for Canadian-based businesses with fast online funding that is up to $500,000. The approval amount, rule of thumb, 1 to 2x of your monthly revenue. 30,000 monthly revenue example, 30,000 to 60,000 advanced. Of course, it can be higher or lower depending on your business situation, business's situation, repayment amount. I'm not going to go through all this. We're going to speed up through this. You can pause this video when you need to, look at this, and you'll see you have these details and what you have there. So the received amount, the terms available for smaller, larger funding, what terms would you get? Automatic payments here. Most all have automatic daily payments Monday through Friday, not on holidays. Some have weekly payments, no monthly payment options with any of these funders. Business checking account is needed for this. 6+ months time in business, 10,000 plus a monthly sales. Owner has 550 plus credit score, minimum 2+ employees. Current loan consideration if client has current total advance. The amount you still owe will be taken into consideration and the reduction in your approval amount. More funds, 2nd to 5th positions may, quote unquote, may, I'll say, be available. So there's that. I had another one in here that I wanted to share. Let me bring it up on my other screen. You won't be able to see this right now, but I wanted to bring up the self-employed section part so I can show you a little bit more of this. So let me go ahead and paste this into this document or into a separate one. So this is the one where it's gig funding, instant funding, same day approval, instant funding usually most of the time here. Same day funding up to 10K, approval amounts 25 to 75% of your monthly revenue approvals usually. Rule of thumb, there's an example. Average pricing is 1.39, your dollar amount. It can be as low as 1.2 and as high as 1.69, but we see 1.5 at most when the revenue is better. Example, you get 1,000, you pay back 1,390 on average. Example 2, you receive 10,000, you pay back 13,900 at 1.39 rates. Repayment discounts are available if you pay them back early. Automatic weekly payments only, no monthly options with any funders. 3 to 6 month terms. Renewals are usually 16 weeks, which is 4 months. More so for clients at a 3K plus minimum revenue level. Personal checking account can be used for business. You can also have a business checking account. Online banking setup, no FICO score check. California and New York can't work per laws and can't fund there with the service right now, so it won't work for these states. Bank linking with Plaid is what you're going to have to do. So if you go through that, 5% or more banks don't work with Plaid. So if that's the case, you might have to work with them and see if they can, or if there's an option. Maybe you have to sign up with Plaid directly, and that may work. So that's another option. Qualifications, 3,000 plus in monthly revenue, 4+ months time in business, minimal S and NSF as I have right there. Current loan consideration, 4+ deposits always best. 5+ sometimes you'll see, 3+ is somewhat, but 4, 5+ now you're doing better. How it works, I just gave you guys an example right here. I'm not going to go through it all, but as you guys saw before, what that would look like. So now let me backspace and go back into the revenue document, and we're going to go into now. And then I'm going to jump into bank term loans and hopefully a little bit of SBA, and then close up shop. Give me 1 second so I can scroll through here and find. I could just Control F and go through the line of credit, but I'm going to scroll down here, and we're going to go past this. Business line of credit, fintech lender, and 12 to 18 months. You have to understand that there are fintech lenders, then there are bank term loan lenders, bank term loan, bank line of credit lenders. So if you're trying to do a bank term loan, FDIC Bank, I can help you with these online. And a lot of times it's much faster, stream 10 to 15 days. And you'll know within 3 days or so if you were disapproved, you'll know. Usually it can change. But if you didn't have anything shared with you within those 3 days, a lot of the times it can mean that it's moving forward. Don't always expect that, but 10 to 15 days, you don't have to provide any kind of collateral. Yes, you have to have better credit with the bank term loans, bank lines of credit, like 680, if not 700, 720 plus, 680 plus on all 3 consumer credit bureaus, 620 with considerable factors, sufficient funds, non-sufficient funds, all this other stuff, but it's still hard to do at a 620 level. Others might ask 660, but the requirements have changed. You see often 660 with one business liquid credit, but now you see 680 and then 680 on all 3 consumer credit bureaus. Things change. You might see 700 at one point. There's a lot of credit card debt out there. That's also a big reason why credit has changed and requirements, because there's too much credit utilization, DTI, everything is going downwards. And you can only imagine how far that goes and how bad it is. So if you're that person right now struggling with credit card debt, and I've been there, I know what it's like. So you go through these issues and you have to figure out, do I need funding to pay off the majority of that and then plan for expanding? But by the time I pay this off, do I have enough left over, or now I have to pay back even more with this? I just used my credit as fast as I paid this down. Wait a minute. And now I don't have the introductory 0%. So I'm paying 22% APR on this. Like, okay, but per month, oh, wait, it just took down my cash flow and my business has been slowing down. You have to think about these things even more. And if you need my help, I got you guys. Don't worry. So Let me go back into this. And terms 8, 12 to 18, 24 months. Payment type, weekly, monthly. We'll decide if you get weekly or monthly, if you are in the sweet spot or not. The sweet spot details will be down below later in the requirement section. Monthly fees, usually you see $20. Easy to understand. Draw fee balances when drawing funds or maintaining the balance owed. No prepayment penalties plus big savings with early payoff. No collateral is required. You can lower. Sorry, I got a text message. You can lower your weekly, monthly payments by drawing out more. Longer terms can keep your payment down. So lower your weekly, monthly payments by drawing out more. You might think that's going to give you higher interest, but as you pay down your previous amount that you took out, that's usually how it works. There are people, though, who take out more than they can chew. Now they're left over paying the one that they just took out first, which is fine in many cases. Other times it is not. So know how much you can afford, know how much you can pay down during periods, during quarters, during seasons, during days, during weeks, months, by week. Please know that stuff. You need help? Hey, and if you need better accounting, bookkeeping, I know who's best to help with those. I just referred a few people to a law firm. People ask me, like, who do you recommend? I know these people do well. I know a few people. I know people, even if it's not always somebody on the inside, might be just from the outside, but I do know a lot of things from the inside. And so I can go, hey, I'm referring, I know that person needs this. Let's help them out. They want to grow a business and they want to keep their business afloat and strong. So no collateral. Longer terms can keep your payment down. Balance fee is anywhere around 1% per week of the balance. So for every week you have it open, you are charged a 1% fee on the remaining balance, and it can be as low as 0.69%, and it can be as high as 1.39% per week. So it's amortized that way per week. If it's per month, you might see how you can calculate that number a little bit different. And again, one application can be assessed for both. When you go through the app process and you won't qualify for a line of credit, I would oftentimes say just click both for the advance and the line of credit. So there could be a look at that. You apply for one. Oftentimes you'll see both will be assessed of line of credit and a lump sum. But oftentimes you'll get approved for a lump sum because most people find it hard to get approved for the line of credit. It's not easy. Even with these qualifications, there's still more to look at. So advance solely or both, but have that expectation in mind that it's not always going to be easy to get approved for a line of credit. If you get an offer for both, great. You won't get as much for the line of credit as you do for the lump sum. I'll tell you that. The approvals for lump sums are much more than the line of credit, but if you can bundle both and it makes sense for you to do that, who wouldn't want a line of credit? But is it the amount that you need is the question. And is it going to give you as much flexibility with that amount of funding that you need? If you need to show you need more funding for a specific project, then lump sums usually can work out much better for that. Bridging cash flow gaps, liquidity issues, and more, lines of credit. If you're growing your business too and you're taking out more and consistently taking out more and you need to replace your costs, okay, spurred up costs come up, you have a line of credit. Fixed variable costs, they change quite a bit in businesses. And as you grow and scale your business, they oftentimes change. Economies of scale change. So withdrawal fees can be anywhere from 0 to 3%, plus depending on your file. If you are in it for long term and want small monthly fees instead and so forth, it may work out that way. So here's an example. I'm not going to go through all of this on the line of credit, but there's an example right there. And if I could help in time and give more. And again, guys, I'm going to go to the comments here soon. I know I'm trying to wrap this up so we can get into the bank term loan line of credit, SBA. I'm not going to get too much into the SBA today, but thank you guys for your comments. I do greatly appreciate you guys. I'm going to go to it when I get a chance. I know I'm here for quite a bit. So I could say, let's take a break, come back when I'm going after it. I'm going to take my break. I'm going to relax today. So let's get this looked at. So 0.69% to 1.39%, excuse me. And this is the cost of the funds we're applying to. Think of that as rates and interest, but cost of funds is generally how we're applying this. And think about the lump sum when we spoke about cost of funds, what you couldn't walk away with, principal, interest, etc. For example, let's say you approve for $20,000. Let's say that happens. I'm not saying it will. And withdraw at a minimum of $1,000 with a 3% draw fee, which is $1,030, then divided by 12 to 18 or 24 months, depending on what you get. So dividing that number into the 12 months you got, 52 weeks, that's 19 plus the cost of funds, 8.96% weekly cost, and you pay $115 per week. So you see how that's such a low cost, $115 per week, or if a different number, if it's not $1,330, $10,000 or $1,300 or 130, do you see how the amount per week you're paying, even if it's daily you get approved for, would be much lesser than the lump sum? Yeah, but everybody wants that. Not everybody's going to get it. I get these numbers from, and then I give you guys an example here how I got the numbers, but let's kind of speed through this. It's all there though. And oops, let me backspace that and deselect the red icon, red marker. An example for 10,000, I gave you guys an example for that. If 18-month terms, if 24-month terms with a $10,000 draw, see, all that is there. I gave you guys even more. I went above and beyond and gave you guys even more examples. I could have even gone deeper into each one of these sections, but I left it as it is. Now, if it's per month for each scenario above, then it's respective order for the 4 examples. You might see 460 plus or minus, 1,092 plus or minus, 912 plus or minus, 780 plus or minus. Preferred line of credit requirements. So credit limits are between 6,000 to 100,000 or so. Getting above 100,000 uncollateralized for anyone is very difficult in this market. Even higher tier revenue clients with a line of credit are getting theirs pulled back. You don't use your line of credit. If you've ever had a line of credit and you get that pulled back, well, I've seen it all. And I've heard stories from friends too who have had lines of credit for like 250,000 for years. And my goodness, like completely stripped away, not even lowered. Others might get it lowered, but that's something to be cautious of. Use your line of credit. Will they pull it? Like if you don't use it, maybe not, but they'll see that. Like, how are you using their line of credit? You have a need for it. Have a minimum of 200K in annual gross revenue. So minimum 200K. Other times with different industries, 250K. I'm seeing a lot right now, 300 to 400K in annual gross revenue, 500K for certain industries. Have 2+ years time in business, TEIB, time in business. Used to be a year, so I'm giving you what it used to be. 2+ years time in business. If it drops back to a year, well, it's still hard, but 2+ years, other 3+ years. The sweet spot though for you, the merchant, is the 250 plus in annual gross revenue, 2+ years time in business, 685 plus FICO. Used to be around 675 plus FICO Experian credit score, and used to be as low as 625, even lower than that at times. But now 685, and even the minimum, guys, don't do just the minimum, okay? I don't have to always say it directly. Depends on who the person is. I may have to say it directly to that person. I infer a lot. I'm somebody who will be indirect quite a bit. I want to help you see it in your head and imagine it. Other times, again, I have to be direct when I have to be. So right here, just don't settle for the least amount. Well, I lowered my credit, but it's something else. Being in the sweet spot doesn't guarantee you a monthly line of credit. It improves your chances and approvals depend on a numerous amount of factors such as possible disqualifications, high debt to income ratio, over 35%. You're seeing that with bank lines of credit. And I'm going to get into the bank lines of credit, guys, here, where if you have over 35%, you're done. I've had people recently with 75, 60, 40. Those who have 35% and under. Now, with fintech lenders, it's a bit different. Even 35% and under doesn't guarantee you as much as it does with bank lines of credit. But bank lines of credit are a little bit different because you're almost already acting as a preferred client if you can get a bank loan, a bank line of credit, and those preferable rates. History of late payments, too many inquiries, credit utilization ratio is too high. You have an existing line of credit report issues that need credit repair and correcting, recent bankruptcies, charge-off accounts, etc., delinquency, continuously missed payments, mortgage payments, things like that. And there's a little bit more in details that I can go further into, but I'm going to leave it at that. Restricted industries list. So higher risk industries will not be eligible for this product and product feature. And this can also go for the last line of credit that we were going into. So it's not the preferred line of credit, and it's a different type of line of credit. Construction. All construction classes usually get declined. Transportation and warehousing, all trucking, transportation. Wholesale trade, import, export, accommodation, food services includes restaurants, real estate, rental, and leasing, all real estate, mining, oil and gas, administrative support, waste management, remediation services. Who is this best for? Retail, healthcare, marinas, repair shops, e-commerce, metal fabrication shops, and more. So like I said, if you want to add the line of credit with the advance, go for both. But if you don't qualify and you already know you just want an advance or a line of credit and you can qualify for a line of credit, even if you could just qualify for the line of credit, make sure you say advance or go both. Because what if you don't get approved for a line of credit? If it was already reviewed, or I have to come back and say, well, would you like a lump sum? Then I might have to reach out to you to say this didn't work, but this is available. So line of credits usually approve you for like 50 to 100% or so, many times like 40 to 60% of your monthly revenue. And don't don't push past the 55K plus in the market, it's tough out there unless you're generating like 6 figures per month and more like a 500 plus. You'd expect higher amounts on a lock in a line of credit approval. In many cases, closer to 100K though. Then the lump sum. So if you don't have other lines of credit and would like to maximize your funding, then you can add a line of credit with the lump sum if approved for. So if you have a bank line of credit, fintech line of credit, there's those things to consider if there's an approval. So not necessarily because you have already another line of credit, won't you get approved for another one? Just considerable factors to look at: cash flow, dependency, needs, and more. Documents: 3 months of bank statements, 4 months in California and other states perhaps. Voided check, copy of your driver's license, and similar to what we saw before. There's another option here with the business line of credit, 5,000 to 100,000. Somewhat similar to what we saw before, kind of charge more or less. So I'm going to speed through a little bit of this with the examples and what you need to use this for. An example of what I'm giving you guys right here. Qualifications. This one has 680 plus owner FICO credit score as opposed to 685 before. But a lot of the times you're going to want a 700 plus credit score, 2+ years time in business, 250,000 in minimum annual gross revenue, 15,000 plus monthly revenue is a good spot. And it can be 40 to 50K plus per month in the market for many industries though. Possible disqualifications, and there's more. And then no. So now I'm going to switch over to the one for the bank term loan and line of credit. And then we will close up here soon. And I'll go to the comments. So FDIC bank term loan, you see this here. This is something that is available, if not now, in the future, guys. So I want you guys to understand that, again, I have your best interest at heart. I'm not going to put you in a service that doesn't make sense for you to go into. Some people will come to me and they have that aha moment because I know what I'm doing. Silently, I know what I'm doing. Inside voice, I know what I'm doing. So I know, again, what I'm doing when it comes to this. And you're a lot of times being hard pressed by people in the boiler room. So think about it. Would you rather work for a reception or go to somebody who has a large company or not, 30 employees? Maybe they have a telemarketing center calling you, or somebody in that business, but they don't know business, or they do, but do they run their own business? Have they done this before? Do they know what they're going through? Right? If you want to help that person, help them. And that's what you needed to do. You needed to do. Go for it. But think about the long-term partnership and relationship you're going to have with somebody, especially somebody who has a small business who you're going to help out as well. Help out, also help others through me helping out other people. And through me helping you, you help out others. So it's a win-win-win. It's an oligopoly. You can only win on those 4 quadrants. And so here we have the bank term loan. We have about another 10 or so minutes, guys, comments, and then we're going to close up. Details range from 8.5 to 15.99% APR, more or less. So I said the word APR. See how I haven't said the word APR before? Because the other ones aren't amortized as a traditional loan. They're advances. There's no, you can turn it into an interest per year, per month, and it looks low. I'm not going to get into all the numbers on how you can do that right now. Oh, it looks so low, 3% or the year of 18% or whatever. It looks so low, but it might be helpful, but at the time, it might not always be the way. And sometimes when you use the funding in an advance, you probably didn't need extra, or now you can't pay the extra amount off, and you're like, it worked for some time, but now you're just going backwards. Things like that happen. So 8.5 to 15.99% APR, more or less. Economic conditions, if you're watching this video and the prime rate lowers, the maximum lower amount will change. So you see 7.5% now, was 7.75 or so percent. At a 15.75% or so maximum, that number could be lesser now because of the 7.5%. So you might see upwards of 15.5 or so percent, 15.75%, even a little bit more if possible. And the approval rates here exceed 70%. This is a low-cost bank financing option that allows your business to grow and thrive. Just imagine what lower cost financing could do for your business. Better cash flow. Usually with these, better cash flow. Better ways of navigating harder times. No upfront fees, low interest, fixed monthly payments. Funds can be in like 10 to 15 days. That's why I said it's faster than going through a traditional bank where you're going to spend so much time, order of operations. It can be 2 months. It could be within a month, 1 to 3 months. I know the process that it takes in there. And I don't understand the whole thing. And I know insiders from banks. And because I also help out other people with different types of options. And so the underwriting, the credit committee, the credit facility that it's sent to, is it a new age of people, old people in this market that have their way set and they don't understand your needs of funding and they probably won't approve you or enough of. And now you got to offer collateral, real estate to get approved for even more. You got to put your home on the line. You got to do a home equity line of credit, home equity loan. Unless you really needed to do that, you do that for real estate investments or for whatever else you're trying to do. So you have to keep all of this in mind. And there's no collateral with this option, just as UCC, a blanket UCC lien and in most of these cases, you see blanket UCC liens. So a one-time success fee after successful closing on a sliding scale can start at 6% for the lowest level out and caps out at 2.5% or so, depending on the economy, depending on other factors. With the other thing, with the advance that I didn't cover so much, it could be 0 to 6% or so origination fee, broker points added, and anything else. When you're a better funding client, it might not be no origination or 0 to 2, 0 to 3%. You're higher risk, of course, it's going to be more. But don't look at the fee in any of this. In any of the funding, you have to look at your benefit exceeding your repayment. If you're just so stuck, I need to speak to my wife. When I hear that, she might be the decision maker, or I need to speak to my husband. That's the person who makes the final decision. I get it. But oftentimes when you hear that and you're the one applying for funding, why am I communicating this with you when I should be communicating with the final decision maker? They're the final decision maker because they should know this, and they're likely knowing that more than you will. Or if it isn't, okay, it's split between the two, or various times you have your different roles. That's what I mean by being energy and time efficient. I've seen it all. 80% owner, 20%, 15%, 15% here, 20% there, 30% there. This person does not even know how to think of this, right? I need to help them. They really need help. Like they need help with not getting funding. They need help in their marketing and their advertising. They need help in their lead generation, their systems, their processes, the right amount of automation. They need better customer acquisition cost strategies. They need to advertise this better. They need to target their market better. They need to put their messaging better. They need to tailor this messaging. It's not the what, it's the how. Market message fit. Market message matters. Demographics, psychographics. There's plenty more I can get into strategy when it comes to business, but let's get back into this video. So requirements, 680 FICO minimum on all 3 consumer credit bureaus. FICO 2 is usually the check. There's more than that. Trust me, because of the credit card debt and everything else out there in this economy, they're not going to just look at FICO 2, 8, 9, 10, etc. But FICO 2 is what you're going to see a lot of the time. Ideally, credit utilization has to be 35% or lower. Like I was saying earlier, 35% or lower. You might see that number change as the economy changes, but usually 35% or lower. That number is not set in stone, but for example, your lowest utilization score is like a 76 or an 80, a 90, or way above 35%, and it's way too high, well, it will be harder to consider you. If there are compensating factors, we can be flexible on the 620 minimum FICO, but that doesn't always happen, so don't expect that. 2 years minimum time in business is it. So if you don't have more than 2 or a minimum of 2, well, the advance. And you don't qualify for this, the advance. You don't qualify for this, credit card stacking, business credit cards, home equity line of credit, stocks, mutual funds. You have marginal accounts, home equity line of credit, home equity loan. You have a 401k, IRA. There's maybe specialty programs, grants. But you have to look, friends, maybe something completely different. There's much more, but you have to understand these things and grow. 250K plus minimum annual revenues for the last 2 years, usually for the last 2 years, followed 1 year after the next, not latest year or the year before that, and this year sucked, or the year we're going to look in the tax return recently with the last 2 years, usually the last 2 years. Sometimes there's a lender out there where it may be 1 year and the most recent year is fine, the one before that. Usually increase and better projection is better. The one before that was good, but the one now isn't. It's going to be a little bit harder, especially if it's not going to help you. This funding is not going to help. And your debt's going to far exceed what you earn in return. Industries acceptable are all except cannabis-related businesses. Those are the hardest ones. It's not fully regulated. And I have many people who are doing equity in these, and there's different ways. Angel investors, states, all 50 states, turn on existing debt repayments, no missed or self-negotiated reduced payments, demonstrate ability to carry your obligated debt. So oftentimes when you try to go into this and you try to refinance, because that's what you can do with a bank term loan, guys, with these banking options, you guys can refinance, or the proper word, not to hear refinance thinking different, consolidation loan. That's what it is. It's a consolidation loan with additional working capital as your secondary constraint. It could be that the working capital is your primary, paying it off as your secondary constraint because of how your books look, your debt schedule, and more. but getting you additional capital to meet your growing demands and your needs for your business. And so you have to keep those things, again, in mind when it comes to this: no miss or self-negotiated reduced payments. And that doesn't always look good if you're trying to do all that and refinance, consolidate, trying to get a bank loan. Sometimes, yeah, this is fine, but you're not, oftentimes you're going to see no miss or self-negotiated reduced payments. Carry the debt, very important. Many times with the bank term loans and even lines of credit with specific providers, you see a FICO SPSS business liquid credit score needed. So a 155 or so of FICO SPSS business liquid credit score would be asked for, or even just a PAYDEX score of 70 plus or so. But even without the business credit level building being there, it's a possibility it could work. It's on a case-by-case basis. So it's not like they're going to need that FICO SPSS score all the time, depending on the lender or the bank that I'd send you to. That's why it's beneficial. Why do you need a broker? And I covered that without saying it like that. But again, I can give you 100 reasons, but just to give you two of the most important ones, and I've already said this earlier, is they're going to navigate you to find the best option, as opposed to you, here's one, here's two, here's three. They're not going to give you the underwriting. They're going to give you the details all up front. They're going to market you. How do I know? Because I'm also a marketing professional. Like I said, I have businesses and I've learned the marketing skills, the unlimited for life income skills. And I've grown those businesses enough where I wanted to focus all my efforts on funding. And I've been doing that. While those run for me autopilot, and I go in there, I run some traffic, or I just check my systems, my data, reverse engineer the numbers. Here, I can iterate this, make this better, improve it. Boom. Yeah. And how do I do all this? Because I stay focused. I have the desire, not just the desire, but the motivation, the hunger, the want, the need. It's not all a need. If you need something, you almost come off as desperate all the time. And I tell people the time that you need funding is when you don't need it the most. Lines of credit are usually the best for that. But prepare yourself ahead of time. Don't come in January, February, and you're like, oh, or whatever month it is, March, whatever time. Pero no me comprendes. Like, you don't understand. And I speak fluent Spanish too. I'm Salvadorian, Mexican American. I grew up in Orange County, California, so more whitewashed, but I do speak it fluently. Sometimes I don't always say the words in Spanish every day to day, so I have to even retrain that thought. And the words don't always come off the way, but when I do it, now it comes back. It's that kind of muscle memory. And so I'm just so grateful and thankful to help people. And people tell me I'm extremely relatable. I've been through a lot of facets in life that most people haven't gone through. Didn't have to go through some things, and did them temporarily to get to the next thing. And not everything in life, like I said, I was an academic. It's not linear. I'm that guy who's been battle tested. And if I'm battle tested in financing, where it's the most cutthroat industry of my other businesses, a big reason I'm still in it, guys, is not only to help you guys, but because it's building even more of my character day in and day out. It's a challenge. And because I didn't give up on this, and I didn't give up on you, no matter how it turned out, and it's proved me right. Like, don't always, like, I see it in people, like, they're proving me right. Like, they fell off, they're going to do this, they're going to do that. They're going to be that kind of person. Don't be that person that I have to think, yeah, they proved me right. But it's the challenge of being in the space too, of building that character even more than what I already have, and like showing up to it. It's still that thing. And like, it keeps building goodwill, good character, business and in life. So it's not always that business liquid credit would be asked for, but yes, especially with SBA loans, E-Trans scores, business liquid credit. Sometimes you see a level of 125, 135, 115, but terms 2, 3, 4, 5, 7, or even 10 years. And the 115 I said earlier is not always the case, but terms 2, 3, 4, 5, 7, or even 10 years again. So see where it's getting even of a larger amount. So some people tell me they need 36 months, 48 months, etc., 2 years, 3 years. But you can grow into that over time. If you needed one of these, or in advance, you get more funding. If you needed to grow more, and it might not always be 2 years or so. But important to note, any owner with at least 20% or greater ownership stake will need to pull their own free credit report, the full report, not just a summary. I highly recommend using Experian free credit report. You might have your own, and you don't want to sign up to a service, but I need to see, whichever one it is, I need to see the full credit report. If you start off by just sending me the numbers, okay, that's the case, but I need to see the full thing after that. Send me the full thing. I'd rather have it all at once. I can look at it and review it. And you can do it with Experian free credit report. You can do that. And if you have a premium account with Experian, that's where you're going to see quite a bit. You can have all of this. So if you pull your own free 15 and 100 page PDF report, it will not count as a pull on credit. If somebody on the team does this, it will. So please do it yourself. Yes, there are services out there. I'm not going to start naming them where you can just start off with the soft pull. I soft pull initially and but do it yourself. I get this all the time. I get emails, I get Dropbox in my folder, create a Dropbox where you can send it in an email. I get it all the time, credit reports quite a bit, and I review. No hard pulls until you go to closing. All owners with 20% stake or greater should ideally have a 680 FICO credit score with all 3 consumer credit bureaus. If only one business owner can meet the 680 minimum, we may still be able to make this work. We have other low-cost bank credit facilities where you may still be a fit. So oftentimes that can work, but it's been a harder economy. So please take care of one another's credit. Again, all owners with a 20% stake or greater. Advances, you'll see that too. 51% majority owner, maybe one person's credit. Majority owner will be looked at 50-50. You can see both. Sometimes over 50% one, but over 15, 25. With the advances over 25%, you'll see that oftentimes what you want to have for multiple people to be looked at, etc. Sometimes just one. Okay. So it's that. You can look at multiple owners to make sure that their credit is where it needs to be, because one person who's taking on a lot of the debt or something happens, I'm not trustworthy. I don't care if it's not the reason they needed funding for, the reason the funding won't impact them. No, it's too much risk involved. Having existing debt is fine. Many applicants who come through are successfully funded with having existing debt at the time of their application. Having debt does not automatically disqualify you. It's another data point that helps to have along with your company's other specific metrics that will be factored into your approval. The question you should look at is what we'll look at, and what we'll be asking is, can you easily, afford the existing debt and potential new debt? Okay. Many times we will get a decision of a yes or a no in 3 to 4 business days. Other times it's a bit longer. Good news is that usually there's a declined file that comes back sooner. So in theory, the longer we hear nothing, the better the chance an offer will be extended. Like I said a little bit earlier, the underwriting process can take up to 30 days, business funding days as well, because everything is at a bank, and that takes time like anything. The good news is we can get a yes or a no within just 3 to 5 business days, as I said earlier. Is there a PG? Sometimes a business applicant is strong enough as a business only to borrow funds without the owner's PG, personal guarantee. So there's that. Other times it will make the bank feel more secure to have ownership's PG. So just don't be surprised with you getting the PG. That's just often with anything out there. Be responsible and accountable, please, for your debt. Other times it will make the bank feel more secure, again, to have ownership's PG. Each scenario will be different. In either case, if you plan on repaying your debt, it really should not matter, and it shows responsibility, accountability, and maturity. No collateral or pledge. All credit facilities being applied for here are for unsecured financing. This typically means that as a borrower, you are not required to pledge your collateral to secure the transaction. So like with SBA loan coverage, your debt to income, your real estate, account receivables is the primary thing that most bank lenders, most SBA formatted, I think comes from, it's a whole different thing. Where that money is coming from and how it's being allocated. Can people self-fund that option SBA-wise? Where are the funds coming from? You'll see with collateral coverage, you have 80%, not normally up to 80%. You have to have at least 80%, if not 75% plus collateral coverage. 90%, we want 100% collateral coverage. Your risk, too high, we need 90 to 100%. That's not doable. Hey, I don't want to liquidate. I cannot afford. I have to keep these notes, these receipts, these unpaid invoices like this. I can't have them encumbered because we're going to have a project coming up and I'm going to be low on cash flow. I'm going to need to collect on that and I won't be able to get additional funding. Like that's the way of thinking. And you go, well, in the next 2 days, I'm going to generate 40% profit. My margin is going to go up by 10%. My marginal returns, my markup costs have lowered. And because of the tariffs now or whatever's going on in the economy, well, I'm going to keep my pricing low, below $4 to $3 and make enough profit with then increasing my economies of scale, my increase of my input, getting a better output. So we're not required to pledge collateral to secure the transaction. However, many banks will want to place a UCC lien on the general assets of the business. This will do 2 things. 1, it establishes the bank as a lien holder for legal purposes. And 2, it alerts other future lenders they have an outstanding debt, which can serve to help you avoiding getting over leverage in the future. Now, when I said SBA earlier about collateral, it's not always that they're going to have that. So up to 350, up to even 500,000. There's even been some requests recently for this. But you see normally up to 350,000, no collateral is needed. There's other options up to like 150,000, but you're going to have better credit, like not even 700 sometimes, 720, 175 plus business liquid credit score, 2+ years time in business. Cash flow is not really what they look at. Profitability doesn't have to be good in profit positive, doesn't have to be cash flow positive. And now that type of product has expanded to then just not just using it for working capital, but even for like even debt consolidation, debt refinance it for a little bit more. But those are a little bit harder to get. And if you needed additional funds on top of that, or we grow into that, there you go. And so addition, there's also a business line of credit side. So we will review that. So see if you can qualify for that. Business line of credit, you don't have to pick whether you apply for a bank term loan or a business line of credit. There's a one-page application or one application package for your business to start the process for both. And you will receive offers for the maximum amount on either or both that you can qualify for. How do you apply? So in time, I can share this with you, not through this document. If not, or I'll share with you. It could be in an email. I've done this plenty of times. I just did this recently. I'm working on quite a bit of bank term loan options as we speak. And if you meet the qualifications, here's what I'll be asking for. A one-page workable, fillable, workable, and working capital application. I can send this to you in time if this were the you then have to go to Experian, like I said, download the doc, I said that a little bit earlier, so I won't sound redundant. The first two can be sent above faster, and then after mine on our initial review, if we decide it's best for you to move forward, I can collect the best and review, the rest and review. Oftentimes, though, you can just send everything, but oftentimes you see a lot, but you would want to have both of these two, number one and number two first. That way we're not wasting our time having to ask for more. And if it's in good standing, we say, yes, okay, it looks good. Well, we'll wait for the rest of the documents. Or if you already sent everything at once, we're good to go for a different part of the process. Okay. A copy of your SS4, IRS form showing your employee ID number for your business, 6 months of recent bank statements. So it's more than the advance. You're starting to see you're being asked for more now. Well, do you want to supply less? Do you want to supply more? Can you supply more? Are you ready to? I have people who don't even have their P&L, and that's fine. It happens. But please, you don't have your accounting right, your tax return, it wasn't done right, you need an extension, balance sheet, what is that? Debt schedule, oh, I didn't have my own, or I need one because I didn't have that, or there's just so much. 6 months of recent business bank statements, all pages in PDF format. Please send each month as a separate PDF attachment. That's what I would like to see. No picture taken. Believe me, I've had that taken before. Like, okay. There's so much that I can mean. Articles of incorporation. So like certification of formation within the state, SOS, things like that, articles of incorporation. 3 most recent business and personal tax returns. Others, you might see 2 years only is what's needed, but 3 most recent is usually, and the more they ask for, the better. It only helps your case do better, even if it's a lesser revenue year or so, profitability. It's like you're going to have a better track history and record of us knowing this and as a preferred and a better client a lot of the times. A completed business debt schedule, I can send this to you in time. I may ask for yours in on top of what I have, and you have to put everything on our business debt schedule, so it's legitimately getting submitted that way. Year-to-date profit and loss statement and balance sheet, very simple. What you're going to be asked for, cash flow statement, in other words, you can use that there. But year-to-date profit and loss statement, the year-to-date P&L and balance sheet. A copy of yourself as the owner and owner's driver's license, front and back. A clear cell phone picture is fine. One thing too, per bank policies, we want only 2 owners maximum, okay? When you go over 2 owners, complicates everything. Everybody has to submit something, they don't have it ready, or, oh, this wasn't tracked and reported accurately. I'm not having it. It's wasting my time. And not like that kind of way. I have to move on because I got so much to do in a day that even if we didn't speak, like, don't expect this to always happen. For clarity, you needed clarity that makes sense to. But that's also why I have a questionnaire form that gets submitted, and I have an additional field to send details or to add details into what are the needs. Numbers are going to help me too. But yeah, again, guys, I'll go to the comments here soon. We're going to close up. We're going to get into the line of credit, SBA very quickly stuff, and then we'll close. So driver's license, 2 maximum owners per bank policies. Things change too. You might see another one that could ask for more, there's a different lender, but usually 2, no more than that. It can be less than 2, it can be 1. But yeah, that's something you have to pay attention to. A copy of the owner's driver's license, front and back. A clear cell phone picture is fine. Oftentimes it's just the front and you lost the ID, so you don't have the back. I've seen that happen. Like, guys, I've seen it all. And I usually have an answer to, or I'll go communicate this with the team or the lender. I'll ask, I can even email, text, if it's a call, but just to see where things are up to date. Hey, is this going to work? Or have you guys changed something with this? Copy of avoided check or bank routing account team number info. There's also things out there like, even with the advances, a bank letter, like that you're the one primary of that account, signature, like if you didn't have a voided check for those. Once approved, the banks will wire your financing directly to your business bank account at closing. The title on this account must match your application, no exceptions, period. Like when you go through getting a home, you do everything, you're going through escrow in certain ways, the title, who's the first trust deed on dirt, on land, whatever it is, just make sure everything on the account matches. An AR aging report, if applicable, copies of your MCA contract and contracts, if any. So those will be looked at. Business line of credit with an FDIC bank, similar to what I just mentioned here. So I'm not going to go through all of this, what I said before. And it could be a 12-month term or less, as you usually see. Only pay interest on funds you draw, and only on the number of days the monthly is drawn by you and your business. Payments are monthly, never daily or weekly. Usually you wouldn't see that with banks. Important things to note, as I said before, kind of a repetitive thing here, what you would need to get submitted. Bank term loan option number 2, 30 to 350,000 in loan funding. Choice of 2, 3, or 5 year repayment terms normally matches with the term, with the amount of years you have in business. That's usually the amount. Like if you have 5 years, it could be a 5-year term. I'm not saying it will be always that. 3-year time in business and more, you could probably potentially get 3 years and above. You get monthly repayments. There are no prepayment penalties. You get fast loan funding typically within 2 weeks, so similar to what we were seeing before. Fixed annual interest rates starting at 6.9, but don't expect that with prime rates being where they are now, 7.5, so 7.5 to 15, 7.5 to about 16% or so. Things can change. Leniency on use of proceeds funds. Term loans can support construction, remodeling, and more. Bank term loan eligibility. Have a minimum of 3 years in business. Be a U.S.-based business owner by a citizen or lawful permanent resident. So 1, you see 2. 1, you see 3 years. Be a FICO of a 680 or higher. Have no outstanding tax liens. Your minimum revenue requirement is $250,000. Business not have bankruptcy or foreclosure in the last 3 years. No recent charge-offs or settlements. Your business must have appropriate cash flow to support your loan payments. Here's where the funds can be used for: general working capital, purchasing inventory, all the way down here to business acquisition, partner buyout. You see refinancing, business debt, marketing, construction, remodeling, business acquisition, partner buyout. People will use these because they don't have other options, or this is the best one. There are several common eligibilities for this program: startup financing, house flipping or real estate development, refinancing, personal debt, floor plan financing. Industry is eligible, so you can see a little bit there. I'm not going to cover all that right now. Here's a list of restricted industries, so you can just see that. I'm not going to go through each one of them again. General eligibility, there you see. Individuals, minimum annual revenue requirement, proceeds, for profit, 3 years in business with corresponding tax returns. Credit for all individuals owning 20% or more of the business. Current personal credit, minimum personal credit, FICO 680, business credit score, liquid credit 155 or greater. Public record search for business owners and owner. No bankruptcy in the past 3 years, no foreclosure in the past 3 years, no open tax liens or outstanding judgments. Cash flow analysis will be done from myself and others, calculating using these documents. And there's more numbers that I look at, not just cash flow. Year-to-date profit and loss and balance sheet, business debt schedule, 2 years of business and personal tax returns, 6 most recent months of business bank statements. Barriers to fund doesn't always mean that it will cause a decline, but it's usually high up there. Declining revenue trends and borrowing businesses or affiliates, unfiled tax returns, criminal records, businesses or guarantors that are mid-litigation, that's huge. Undisclosed debt, UCC liens. Extra, global debt service coverage ratio of a 1.15 plus, business debt service coverage ratio determined by business income and business debt. This says sign me out as what it looks like. So it looks like I will have to, here. Okay, so I'll just leave it as is. I don't even have to sign into this one. It does that for some reason. Hasn't happened in some time, but it like logs you out with the connection. And now let me go down here. That's SBA loan. We're going to get to that in a second. So you see that here, cash flow analysis. Conduct a soft credit pull that will not affect your credit. However, in processing your loan application, lenders who we work with request your full credit report from one or more consumer credit reporting agencies, which is considered a hard pull then and happens after your application. is in the funding process and matched with a lender who is likely to fund your loan. Underwriting guidelines based on debt coverage rate analysis. So funding process and match with a lender who is likely to fund. So which is considered a hard credit pull and happens after your application is in the funding process, et cetera, et cetera. Loan proceeds here cannot be used to refinance a short-term obligation created with the intent of refinancing with an SBA 7A loan. We calculate global cash flow for guarantors, recommend gross annual income of $250K. So it's not just like you can't use it to refinance or consolidate, but what's the actual intention? Did you have to wait some time before you then consolidated that? You can use the funds for else and then refinance. So it's quite a bit of that. So there's that to get started with. And then for the SBA loan side of this, let me bring this up here into view. And this is where we're going to close up. And I could give you guys just so much more. Sorry, there was an error there. So let me open up this document. SBA loan and alternatives and Bolt loan. And I still have the creative credit part, so I'm going to try to cover that as fast as we can. So I'm not going to go through all this with the SBA. In time, I can cover this with you. But 675 plus credit, you see 680 plus a lot of the times, LTV stuff. Current prime rate, 750. You have to adjust a few things here too. No felonies, no delinquencies or default on government loans. Cash flow, so it's somewhat similar to a bank term loan line of credit. Different documentation. It could be asked for more personal financial statement. There's lower amounts to be approved for as well. Higher amounts depending on that SBA loan lender. Future projection of profitability and cash flow is much more of a need with these. Also, historical tax returns is also going to be looked at as things shift in the economy and the market. But future projection of cash flow profitability is something that's been standardized and looked at. So yeah, you're going to need that. No bankruptcy, no foreclosures. Last 3 years, those are similar. And just what documentation is needed: tax returns, year-to-date profit and loss, current business debt schedule, application, another SBA loan type of scenario, and cash flow analysis, information to gather, barriers to fund. And let me scroll up here a little bit because of time too. We don't have to go through all this too. It's just so you know, this doesn't have to be all done like right now on the service. If you're on a different page watching, you need fast funding, that'll be the place to start with. So you see quite a bit here. I'm just going to scroll through this just to show you a little bit about what to expect from this. You can pause to come back to, and as things change in the economy, I might have different numbers that I need to adjust. So different lenders, different services to go into, projected cash flow and assumptions. Could this work? Could this not? Minimum 2 years, 675 plus FICO, business liquid credit 155, global debt service coverage ratio, general working capital, equipment purchase, refinancing, business debt. If there's one up to 250,000, there's that as well, but you would require to have better credit and more details. So let me quickly do something here on my screen. Down here is another one for the Bolt loan side of the equation. This is different. Not a product endorsed by the SBA, so it's not a product endorsed by the SBA. So I wanted to add this here so you guys know this. 10-year terms, up to 10-year terms. You see this here with prime rates plus 3.7 plus 4.75% or so. You may see if things are adjusted. Like I said, again, things get adjusted from time to time, and there's a different approach to these. So best for working capital, used to cover, and it's been added for more consolidation if possible, unless things change. Then you're seeing the 700 plus personal credit score, 2 years in business, 175 plus FICO SBS, no down payment and no collateral is needed. And there's additional services if you needed to check that out. So here, let me look at something by logging into my account on a different tab. One second. So now I'm logged into my account. I'm searching on a different tab right now. Or it's not loading for some reason. Okay, might be that I'm live. So I'm going to leave it at that for now. Let me move over to the personal term loan type of financing and the creative credit based. So this here is one that could be helpful. Oh, I can't sign me out. So I'm in a different tab. It's because probably I have the screen open, but I do not think it's because of that. I'm logging in on a different tab right now. Okay, so now it's loading the page properly. So that's one way. If you go with like the bolt loan, which is different, and what you would be able to use it for different needs. Let me go back to this, and I'm looking at a different tab right now, so I can bring this up. One second. Yeah, I'm on a different tab right now. And let me look at this. Okay. So it could be used for different needs now for that other option. It depends on the type of loan you're getting to. Could it be used for refinance, working capital, and additional needs? And it's different. Things change from time to time. So again, expect that to happen and be the case. So everything you saw SBA, things can be adjusted to be seen and what would be then asked for. Now we're on this one. And now we're going to conclude with this. I'll go to the comments. This one is for creative credit-based financing for like a personal term loan you can use for business and more to view with this. And I'm going to close this up quickly. So creative credit-based financing, usually a personal term loan with 0% interest business credit cards on the business. At times it can be personal side. You need a fast track program from your personal to get business credit ready. 3 to 5 week program a lot of the times, maybe 2 to 3 weeks, if not in a week to 2, but 2 to 3, 3 to 5 weeks. 700 plus personal credit. So you do have to have better credit when it comes to creative credit-based financing options. And that's just the difference with these. And so that's what you're going to see there. 6 to 8 years minimum credit history a lot of the times. At least one 5,000 credit limit, but 10,000 plus credit limit is best. Other times you might have seen two that equal 5,000, but 10,000 plus, 30% maximum credit utilization, 3 inquiries max in the past 12 months, 2 new accounts max in the past 12 months, no bankruptcies, derogatories, or late payments, DTI below 40% for term loans only, 50,000 a year for term loans only. Sorry guys, we're working with this whole like exiting out, and it's just, we'll leave that as it is. For personal credit, qualify for up to 200,000, build personal credit strength, no business required in stated income, no income verification, no collateral use, credit for any purpose, no restrictions. If you have 680 credit, I might be able to go to somebody else, but it's a personal term loan for business with a credit card for business, if possible, if that's even possible, if 1 or 2. Could they be 0%? Maybe. Are they? Probably not all the time. So documentation, 3 bureau soft pull credit report for term loans, what you would need there. I'm not going to go through all of it right now, but in time, I can help you with this too if this is an option. But 680 credit on all 3 consumer credit bureaus used to be it, but a lot of credit card debt now with these types of services, 700 plus credit. Taxable income for the term loan service, 2 years personal tax return showing. The documentation for the term loan service, I won't go through it all, but you see that for business credit service. Requirements for the business credit service, what you would need there. Documentation, program filters. So I won't go through all this, but you can see here, you can pause this if you need to. We're going to go through because of time. No late payments in the last 2 years, no charged off accounts, seasoned major bank card, trade lines of 5,000 plus limit, or having 2 cards of at least 5K on each. Must have a minimum of 2 open revolving accounts. Usually is it with at least 2 years of history or more. Can have 1 open revolving account if there's an aged mortgage with at least 2 years of history, or 1 open revolving account and aged entity over 2 years. If scores are less than 700 only due to high balances on revolving accounts, you may still qualify, but a lot of times we need to lower that utilization. If you needed to use a cash advance or something else to help you lower that, then there we go. Personal funding filters, I'm not going to go through it all, but you can pause it right here. You will see a lot more right there. Stated income, typical things, success fee. There are higher success fees with this, but you could go do it on your own, go to a bank, not get as much or not get the right amount you need for your source funds and your project needs, or you can go to people who know how to do this better on your behalf, and you have much more comfort, protection, safety, and a better ongoing relationship. So you see that there quite a bit. Existing balance to limit, soft credit pull to start and all that. And monitoring website, you may be able to get that if not, okay. But hard pulls, when you go through credit cards and anything like personal term loans, a lot of that stuff, it's backed by your own personal credit, and it's creative credit-based financing. So credit history, kind of a little bit there. I'm going to go through all of it again. Examples, how it works from start to finish. Once you have your cards part, there's just some tips there that I help out with. And you can see that right there. Down here, how to get started, and just a little bit more. And let me go past this part. And there's another option down here that I have. So in green is usually what separates them. And I can show you what's your best one. So here, personal term loan used for business. A lot of the times it's personal loan, but requires at least 5 trade lines. So here you see cost of funds, potential, the amount, the important details, low revolving accounts. Try not to have other loans you just took, as that can lower your DTI utilization to get you nothing or perhaps way less, which I see quite a bit of. And application process, or so what you would need to submit for the personal term / installment loan. And I have to change some of these numbers to update the years, but you can see as an example there. Additional resources. If you need credit repair, go here. Additional primary trade lines, own doc lines of credit, filing a foreign entity. So that then will conclude our video. And I'm going to go to the comments now. Let me put this into view. I have a hard time doing the whole front video. I like on screen, like you saw. I have to get used to this. PowerPoint I did quite a bit. And then I did a little on-screen thing, like you've seen, split, fully then doing it this way. It's still hard for me to do. But I hope you guys got to see collateral. Now, I didn't get so much into the collateral equity part of all of that, but you can use real estate, account receivables, heavy machinery equipment, certain other types of equipment. There's cash out refinances, inventory financing. Some of those they'll want to see a million amount that you have, and then unpaid invoices. And then on inventory, $1 million plus before they even work with you. Other times it could be less, your lower type of business, but it gets harder at that point. And then 250,000, 500,000 over the last 3 months. But terms might not be the highest, or unless you have something amortized over a longer time, mortgage payments and a balloon payment, if you will. So that's a little bit on the collateral side. I could have spent some time on there, but that's not what I wanted to make today, even remotely close to, and start covering all that. But at least you have an understanding that there's others out there. And you have a little bit of details right there to go to. Credit score with those, especially real estate 600 plus credit. Collateral base, you have cash flow. They might not even look at your credit. Credit's not a factor. They want to see how your customers are getting paid, especially if it's unpaid invoices and stuff like that, or how they're paying you. So here, let me go to the comments. Let me put here on my screen. I want to show. Hi, Yeshua. Not sure if you're in here right now. Appreciate your comment. Thank you. New startup, no revenue, no personal guarantee. So as a new startup with no revenue, pre-revenue, and you want no personal guarantee, there's no such thing. Very unlikely, unless you're going through a corporate account with a business credit card. I'm not going to start naming those cards. I have them in mind, but you think about those kinds of places you guys can go to. You have a Brex card, you have a Divvy card, there's other things out there, but your balance on the account, on a business account, preferably, that's what they're going to want to see. Do you have an average deposited, or do you have a balance of how much does that balance stay in that account? How many employees do you have? There's quite a bit of stuff that you have to upkeep too. And it's not always a guarantee that you're going to get those. And personal guarantees are always there. So it mitigates risks. And again, guys, be responsible, accountable for your debt. Because of other things, that's not an excuse. But if I didn't have the, no. Stop speaking about the past. What can you do right now? Don't think everything in the future. What we're living for right now. What can you do right now to better yourself then for the next millisecond, for the next second, for the next minute, for the next day, week by week, monthly, for the next year? That's what we need to think. And sometimes we are restricted and we need help from other resources, but it's sometimes you've expended everything. I've had people like that, close relationships too, that I'm sorry, but they can't, for whatever, they can't. It's just not doable. This situation they could, but that's not for me, or I just couldn't do it in my area, or that there's just so much. And I hear it and I get it. I hear it, guys. I hear it. I understand it. And so, Michelle, welcome. Startup and non-startup. So I went through a lot of the non-startup, 3+, 4+ months time in business, different lenders. There's a lot more to this. Bank term loans, lines of credit. Yeah, they're going to want to see that. Even credit unions, different ways. even you're seeing credit unions in different places who are capping the amount of limits they can get approved for at 25K, 50K, more or less. So I see it all. I'm a part of many banks, credit unions, and it's helpful when you're involved to understand everything that's going on. So startup solutions, I'll try to leave everything as much as I can below down in the description, guys. If you are a startup and you're watching this on YouTube, in the description and or in the comments, you're watching on a different page, there might be additional resources, a button you can click on to go start with your non-startup funding and what's best fit for you and what's the best fit for you, excuse me. Motivation alarm. I've done it in the past, and I have certain parts out there that have that link, and I have to update things from time to time. And at times I will, like I said, I will put it there. I'm not sure if I'll do it with this one just yet because I have different ways of doing this and how I want it to be presented and shown and packaged throughout the process for each person. So don't expect that to be there. I'll have additional stuff like a questionnaire form if there, and like an email, reach out, the social media, but questionnaire form if you want to get started. That's my most recommended one if you have an option to check out that questionnaire form. But if you're ready to get started on fast funding, I might leave a link for that in the button if there's a button where you're watching from. Good question. And for everyone, what if the business owner has 4K solid revenue with the business and other loans or more? Still repaying and wants a new loan, but with small risks, how do I get the approval from the lender? So yourself being low, small risk, and also taking the small risk from the lender, I have to look at it from both points of view. Yes, you could be considered a much smaller risk because you already have other loans and you're repaying on, you're consistent, you haven't had to do a conciliation, a modification. Another type of loan structure where they maybe for 2 weeks and then you have to pay them back regularly or for a couple of months or so, then you're back on a normal remittance schedule that you have to pay them. Or maybe they expect a lump sum to get paid on whatever you're doing, a reverse loan or things that you're not doing correctly, or you are, but you just got to be careful. And did you get started correctly with that? So it all to be considered is how much can you afford off of what you're currently generating in revenue? Has your revenue stayed the same? That's the biggest thing too, is when I look at somebody coming back to refinance, are they going to get the same amount they got, or are they going to get double, triple, quadruple, more or less? I like to see double, and it can happen, but based off of what? The revenue is just the thing that business owners look at, and that's what they adjust for. You got to look at everything in between that. You're only optimizing for revenue, you're going to lose your business, or you're going to lose out on a lot. And I mean a lot of revenue / sales, predictability especially. So how much are you generating now as opposed to what you were generating back then? Is it still the same amount of revenue? Has it lowered? And are you a small risk because it's gone up, because it's the same and your balances got stronger though? You keep more cash flow, predictability, ROI. Like there's a lot of little things to look at, but can you pay that? But are you exceeding the amount you can pay back? Like of your 16 to 18% monthly revenue, are you getting approved? Let's say 100,000, 145,000 you get off that total of the months. Are you over 16 to 18,000 of a payment, or are you exceeding 16 to 18% of your total amount? There's different ways for me to calculate that number. I'm not going to do it all right now, but how much in months do you have? Divide by that. How much is that total for the month? Are you exceeding 16 to 18%? So the second position usually results in half of that, and then it dwindles down maybe 25% of that. Oftentimes it changes though. Depends on the lender, depends on how your business revenue is doing, the strength of it, how much have you paid down. And also, once revenue, have you generated more? What's the revenue looking like? How much have you paid down? What's the balance and balances? Can you take down 2 positions? Generally, they don't want to do more than 3 or more than 2 to consolidate into 1. Many times lenders are just looking at 1 position to consolidate. So if you're going for a second position, consolidate that 1, net the difference, or it's not even netting the difference. They fully pay that off and you get the remaining amount, or you get the full amount. But a lot of the times you see the net of the difference. And if you're exceeding your monthly debt obligations, not only for the current capital advances and loans you have, but other type of debt, like when we look at that, it's like you're already paying a card here, 2, 3, like it's not current, or it's current, but it's too slow, or patterns of what you paid in the past to now. There's a lot to consider. So I hope that answers your question. And I can't say it'll be a guaranteed approval. There has to be more to be looked at behind the scenes when we're looking at the documents and everything. Good question. Any suggestions for a universal lender? I think that's what, yeah, you said you had lender there in the one before. So lender, I think, easy steps for approval and with low rate repayment. I gave you guys as much as I gave you today, but I would say have better funding details. Like, what do you come to the table with? You come to the table with credit, cash flow, collateral, one of the three, two of the three, or do you have all three? You either have one of these three, two of these three, or all three. Is there more involved? Like, you want a lower repayment, the bank term loan, line of credit, SBA is typically the way to go. But do you have what you have to qualify for those? And it's not just they're going to look at that. I'm going to pay closer attention to your business's operations, the structuring, management, logistical. I'm going to look at a lot. Predictability of current customers. How are you going to get more? If you expected to get 10 this, you got 10 this month appointments, or you got 10 people, how are you going to get another 10 the next month? It's just not, there's a controller here that we need to hire, or somebody needs to pay closer attention to that. I just don't see it. You can't adjust to that easily. So I gave you guys some of the steps, order of operations to have from start to finish. Make sure you're working with somebody you know, like, and trust. Hopefully myself, I'm here to help you. I've helped out many people. I try not to do everything in volume these days. I try to keep it in a close group of people. Doesn't mean I won't be open to helping you. That's not what it is. It's just when you open too much, you speak to everybody and not always to anybody. Friction and resistance, and I have to be careful with my energy and my time and who I give that to, and the standards that I have. I'm operating at a high standard. Not that that means that you have to be there. I'm not saying that I won't help you. That's not what it is. It's just let's be the most energy and time efficient understanding in this process. So get that, and then process one, pre-application, what is needed. I have stuff like this that can help to, but understand this. Okay, before you go in, here's what I need. But once I get into the application, I know what I'm applying for, what the process will look like from start to finish. And then you're going through underwriting, junior, senior underwriting, boom, 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 final underwriting, decision logic check. If so, boom, disbursement of funds. You have your funds you need to use. So I hope that helps. And just being much more of a credit, applicable, cash flow, revenue, even collateral. But collateral is not always the thing. It's just if you're going to get a UCC lien on something, the more collateral you have, the better coverage you're going to get. And usually the better the term, the better the rate. Better the rate usually with that. Doesn't always mean that that will be the case, but you can see that. Yeah, like I said before, I may have that, I may not. Like I said, I usually have a questionnaire form. So if you're watching on YouTube, I might have you go through the questionnaire form first. That's what I would do. And I usually customize and personalize to your best needs, giving your best funding option and options, like through credit, cash flow, collateral, like what you saw here. Maybe it's adjusted, maybe it's an example based on your profile. And it's not all set in stone, but I've done it long enough where I know ballparks and things get adjusted too. So that questionnaire form might be there. And if you're watching on a different page and fast funding is your best option, then there is that as well for you to get started with right away. And you are most welcome. So that'll be all. Thank you guys. I've taken more than enough energy and time to put this together. There's much more I could have covered too. And even in between everything that I just went into, keep in mind this. If you need to rewatch this, different parts, bookmark, come back to, resource, use this for years on end. If there's something new that I create because things are updated, there might be that. And if I don't create a new video because it's updated, there might be a document or so where that's been updated for you to view, if so on that. And as things go, just remember, you have somebody who will be here, a one-stop shop or direct, indirect, where everything I know is happening behind the scenes, getting reviewed too as well from myself and or someone else and the team, getting you the best lender too behind the scenes, all that. And there's different ways of doing this depending on your circumstances, your business, your portfolio, your use of funds, getting the best option available, doing it this way as opposed to that way, getting the best offer, competing to having the best offer. And as a person, guys, I have your best interest at heart again. And having somebody who's, I believe, very loyal, honorable, respectful, accountable, responsible, many different characteristic traits. I'm not saying this to toot to my own horn. I don't do that. I just want you guys to know like what I've been through, and I give you guys a bit of through a freeway. And it could be one you know or don't know of. You were invited to a party, so you're getting to your house, a destination, and you're on this congested freeway with full amount of traffic. You have 4 or 5 lanes. You're trying to get on the fast lane. Maybe you don't have a fast track, or you can't even get to that, or you are on it and things are still going slow, but now you got to move over a lane, and you're behind a semi truck, or you're behind a family van, or a small SUV, a truck, a car, whatever it is, sedan. I can go on, but now you have ways to exit, an on ramp. You exit to get to another freeway. It might be the best thing to do. It might not have been, but you're congested and you're following the path everybody else is going in. You're seeing what they're doing, and that's good in many cases and feeling comfortable doing that. But you also have to think about other ways and being that market disruptor here and also in your own industry and what you're doing, and say, hey, there's a much more efficient way I could do this. And if I planned before I got on that freeway, or I did, but this is going to happen regardless, I have to stick with it. This is my best thing to do. And not getting impatient, not getting frustrated because you couldn't move over a lane. Life's too short to be focusing on, well, they took my parking spot, I was waiting for 5 minutes. Do this. It happened. Move on. I know you were waiting maybe for 5 minutes. My own mother would do that. I've been in the car with my own mother who's done that. But like, I level with them. Hey, I get it. I understand you were waiting. It happens. You're not going to let that defeat you. And then move on to the next thing. So that's what I'm going to leave it at. Again, guys, thank you. And thank you guys very much again. And I know I could have covered so much more, but I hope that video has been super helpful in guiding you guys throughout the year, throughout the next year, the year after that. Share this if you guys would like. If you find value from it, found value from it, please give it a thumbs up. Feel free to share it with others who you feel will find value from it. It can be a friend, family member, a complete stranger that will help someone. And if you enjoyed the video, oh, sorry. Yeah, I already had said that. Please give it a thumbs up. And if you haven't subscribed and you're watching this on YouTube, if you're not, then that's okay. Please go ahead and subscribe and click the bell notification icon so you don't miss any future content on this. Similar business material related content, growing a business, a different type of business, finance, non-finance related, and so much more. So that is all for now. Thank you.